demand zone, right, which was created after price broke the internal structure right here on the lower time frame itself. So now our job as professional trader is to simply wait for price to come back down to either one of these demand zones, and then wait for our entry model to present itself, and then that is when we execute our trade without hesitation, reservation, or fear. So now this is where I would advise you to set the alert at the edge of the zone that you want to trade from. And right now you might be asking me, Brad, so which zone is price gonna respect and starts going up? Let me tell you the honest truth. I am not a fortune teller. I don't have a freaking crystal ball. I don't know which zone price is gonna respect. And the thing is, you don't need to know in order to make money. You just need to wait for price to come down to either of these demand zones, and then you wait for your entry model to present itself, and then that is when you enter for the trade. So step 3 is where you execute your trade after price has entered into your demand zone. So at this point of time, before we get too ahead of ourselves, you must be wondering, okay, are we allowed to trade right here where price has turned bearish to facilitate the pullback? Yes, you can. Right, so if you are looking to trade the counter trend, which means you are trading against the higher time frame trend, you are trying to capitalize on this short-term pullback that we have right here, yes, you can enter for a sell here at all these lower highs right here. But bear in mind, you have to manage your expectation, because the minute price enter into any one of these demand zones right here, we know that at any point of time right now, price is going to switch bullish and it's going to cause price to continue to go up. So the best way to trade counter trend, or rather the best time to do it, is to actually enter for a sell at the start of the counter trend itself. But the minute price enter into either one of these demand zones, I will advise you to stop trading counter trend and look for your pro trend setups, right? Look for your entry model. So if you look at this, there is a gray line right here on the screen, and there's a black line, right? The black line basically represents the 4-hour time frame, and the gray line basically represents the 15-minute time frame, which shows us what price is doing on the lower time frame. And as you can see, like I said earlier, price turned bearish, right? It created lower high, lower low, lower high, lower low on the internal structure, on the lower time frame structure, in order to facilitate the pullback of the higher time frame trend. And like I said, we want to wait for this pullback to be over, demand step to the market, overwhelm the sellers, the supply that we have right here. That is when we know that right now the internal structure, the lower time frame structure, has shifted from bearish to bullish, and the lower time frame trend is aligned with our higher time frame trend, and this is when we are able to capitalize on those high probability trade setups. So in this case, right, what happened was that price came down into this recent demand zone, but it failed, right? So this demand zone failed to do its job, right? If demand wanted to step into the market, what could potentially happen is that price would just continue going up like this and just continue with the higher time frame bullish order flow. But that did not happen. This demand zone failed, and in the end, price went down even further and came down to our extreme demand zone. Now, bear in mind, this extreme demand zone right here, this is the last line of defense. Because if you look towards the left-hand side, this is the last swing higher low, right? This is the previous swing higher low, which means this point has to hold in order for price to remain bullish, in order for the higher time frame structure to remain bullish. Because what happens is that if price breaks through this last higher low, what we have is a market shift, which tells us that price is reversing from this uptrend to a downtrend right now. And I know my drawing is extremely ugly, but just bear with me a little bit, because it will all make sense very, very soon. So knowing that this is the last line of defense, we can be a little bit more aggressive with our entry. So the minute price actually mitigates your 4-hour extreme demand zone, you want to drop down to your lower time frame to actually look for your entry model. Now, you might be wondering, what does the entry model looks like? Don't worry, I'm gonna give you the secret sauce right now. So this is what the entry model actually looks like. So we know that price has turned bearish to facilitate the pullback, and at some point of time, we want to see signs that this bearish trend is over. And right now, price has shifted bullish, and that is when we want to look for our market shift, right? So bear in mind, this is what price is doing on the 15-minute time frame, right? So you want to see price goes up there and break past the last lower high, creating a market shift, which signal to us that right now the order flow has transitioned from bearish to bullish. And right now, we are about to go to the moon. So that is the first criteria that must be fulfilled before you actually enter for a buy. The second criteria is you want to wait for some form of liquidity to be swept. you must understand that smart money, they need to sweep liquidity before they can cause price to start going up heavily. Now, if you don't understand liquidity, here's a quick crash course. We know that above every swing high there is available liquidity and below every swing low there is available liquidity. Why? Because when a retail trader enters for a buy right here, that is when they will place their stop loss below this last low, right? So that is just available liquidity being built up. That is when smart money, sometimes they will push price down there purposely and manipulate price to sweep the available liquidity that we have below these lows before causing price to reverse and hit back up. And the thing about liquidity sweep is that it usually comes in a form of a sharp V-shaped reaction like this, right? You want to see price aggressively going out and aggressively coming back in. So what happened right here is that when price started reversing right here, right, this is when it will induce the retail traders to actually enter for a buy position, thinking that price is going to reverse right now, and that is when they will place a stop loss below this low right here. And that is when smart money come down there, sweep the available liquidity, stop them out, stop these newbies out, and then cause price to reverse and head back up. And that is when the real move is starting to happen. And that is what we have, a liquidity sweep. So after you get your liquidity sweep, after you get your market shift, that is when you want to be waiting very patiently for price to come back down to the demand zone that actually created this market shift. And that is when you enter for your buy position. This is where you get your optimum entry point, ladies and gents. So you can either enter for a manual buy order, or you can set an entry limit order on the edge of the zone itself, and then you need to make sure that you place your stop loss below the zone itself. Now, looking at this entry model, you might find that it looks very familiar. Why is that? Because what we saw on the higher time frame is essentially the same thing. This same exact entry model can be used on any time frame, be it the 15-minute, the 4-hour, the daily, or the weekly, whatever, because price is fractal. Whatever happens on the higher time frame must first happen on the lower time frame. Whatever happens on the higher time frame must first happen on the lower time frames. And the same pattern tends to repeat themselves over and over again. What's up, bro? So while editing this video, I realized that I made a little mistake in the drawing itself, right? So basically, I know you guys are probably confused. Why is this circus and then pointing to this thing? Basically, just know that you are looking for this entry model on the 15-minute time frame over here. Right, so there isn't supposed to be this little circus right here, right? The point of this is just to show you that, okay, there is a liquidity sweep. There's a second criteria. The first criteria is a market shift. And just wait for a price to pull back to the demand zone that created this market shift, and you enter for a buy right there. As simple as that. Now, what this diagram is for those traders who want to analyze their charts on a 4-hour time frame, which means all of this will be on 4-hour time frame. And then once price mitigate the 4-hour point of interest, you will jump down to the 15-minute time frame over here, the minute it mitigated, and then that is when you look for this on the 15-minute time frame, right? But let's just keep this strategy super simple and just stick to what I mentioned, which is basically look for your market shift and your liquidity sweep on the 15-minute time frame, and then wait for price to pull back to the demand zone that created this market shift, and you enter for a buy right there. As simple as that. No need to overcomplicate things here, right? Yeah, so this is more for like multi-time frame analysis, but nah, let's just put that aside for now. Alright, now that you have understood what I'm basically trying to convey, let's get back to watching the video. So now that you have understood our entry model, you will know that after price has mitigated our 4-hour demand zone, that is when we want to look for our entry model right here. But let's say for some reason you miss out on this entry model, right? This entry opportunity right here. What do you do next? You keep calm and collected, and you wait for the next trading opportunity. Right, the next trading opportunity will come after price goes up there and create the market shift once again, breaking past the internal lower high, and that is when you wait for price to pull back to the demand zone that created the market shift. And this is when the minute price come back down here to this demand zone, that is when you go down to the lower time frame once again to look for the same exact entry model. That is why I say price is fractal, because the same thing just keep happening over and over again. And ladies and gents, this is where you are able to get the high probability trade setups, because now we know that the lower time frame is bullish, the higher time frame is bullish, and we got the multiple time frame alignment, and that tells us that right now we are about to go to the moon, and right now we are about to print some good ass money. So what's next after you enter for the trade? After you enter for the trade, this is when you want to manage your trade. And I'm going to show you the exact step-by-step process on how we actually manage our trade. First of all, you'll be placing your stop loss behind the supply and demand zone that you actually entered the trade on. And then for a take profit, I will advise you to either take profit at plus 3R, which means the minute price reach 1:3, like this, 1:3, you get out of the trade. Or you can take profit at the nearest opposing supply and demand zone. So in this case, if you're entering at a demand zone, right, we're entering for a buy at this demand zone, we want to take profit at the nearest supply zone. And if you're entering for a sell at a supply zone, you want to take profit at the nearest demand zone, right? So this is when you can potentially place your take profit at this nearest supply zone that we have on the left-hand side that cause price to come down here. And yeah, that is another way we can take profit, right? So either take profit at the plus 3R or the nearest supply and demand zone. And I will advise you to go and find out what works best for you. Remember, data is king. You need to really gather data to see which take profit method works the best for you and then stick to it consistently. Once you place your stop loss, once you place your take profit, set and forget. Don't micromanage it whatsoever. Don't adjust your stop loss. Don't adjust your take profit. Trust your analysis. Because the minute you start adjusting your take profit, making it wider, or adjusting your stop loss, making it further, that is when you will start to incur large losses and small wins over the long run. And that's not what we want, because we want to be consistently profitable, which means we want to make a lot of money and lose a little bit of money. Now that you have understood our 3-step process, let's go on to the charts and apply everything that we have learned so far to see how we can apply this entire strategy in real time. Okay, before that, let me drink some tea. Now, how can you have a trading geek video without some tea? It's like Batman without Robin, or it's like having some fries without ketchup or chili. It just doesn't make sense. It doesn't exist. Your boy needs his tea, alright? Alright, so cool. Let's get onto the charts. So over here, we got a bullish break of structure to the upside because price created a higher high, higher low, and then this is potentially a new high. We gotta identify that this is the high until price starts pulling back. Alright, so that is when you can start seeing price starts pulling back. Okay, cool. That is when we got a new high right here. Now, remember, after a break of structure, we are anticipating price to start pulling back. And right now, we are still on the 4-hour time frame. We haven't dropped down to the 15-minute time frame to look for our entry yet because price has not gotten into our zone. Actually, no, we haven't even marked up the zone yet. Right, so we are still on the 4-hour time frame, observing what price is doing. Step 1, building the higher time frame narrative. Right, so at this point of time, we know that we are officially in a pullback phase and price is in a bullish uptrend. So we want to actually enter for a buy at a demand zone. But which demand zone are we trading from? That is when you want to start marking up your demand zones, right? So what led to this break of structure? There was this demand zone right here, right? This entire giant consolidation, and then demand step to the market and cause price to skyrocket, right? So we know that this is one of our demand zone, right? So in this case, this is the range method where we are marking up the entire consolidation, or you can mark it up, or rather just refine it to this pivot candle that we have right here, right? So that is your first demand zone. The second demand zone that we have is potentially this one right here, right? So once again, what do we have right here? Price started consolidating around here, and then demand step into the market and push price up, right? So you can actually mark the first one right here, but you can see price has just completely disregarded, so it doesn't make sense for you to actually mark the first one since price has already disrespected it, right? So that is when you mark up this recent demand zone, right? This is when we get a consolidation, demand step into the market, and boom, demand push price up. And then we also got our extreme demand zone, which is this one right here. What happened was that price came crashing down, right? And then it started reversing and start heading back up right there. So this is our extreme demand zone. So now we got 3 demand zones in place right here. And we know that right now we are playing within this swing range, right? This is our swing low. And then this is our swing high. So step 1 is done. The step 2 is also pretty much done because we have already marked up our demand zones. And we know that in a bullish uptrend, we want to trade from demand zone. And the next thing you can potentially do is to set alerts at the edge of these zones right here. So for those newbies who don't know how to actually set alerts on TradingView, you're a dumbass, no offense. You just need to go to here, press the alert, and then press this plus button, and it allows you to create alert. And that is when you just want to input the price point that you want the notification to be triggered on. And then once price get to that particular price point, TradingView will send you an alert in the form of either SMS or email that tell you, hey bro, right now price is at this price point, you can go up there and analyze the charts. That's what an alert does. And then the next step is to just do nothing and wait. And this is when so many traders mess up. They start taking a bunch of trades, they start forcing trades even though there is no opportunity, because they are not patient enough to wait for the trade to come to them. Right? So at this point of time, let's just wait for price to mitigate either one of these demand zone before we determine the next course of action. Boom! That is when price came into this nearest demand zone. Alright, so at this point of time, like I said, this is where you want to drop down to the 15-minute time frame to look for your entry model. And if we don't get our entry model whatsoever, that means price is potentially just going to disrespect this demand zone and come down to the next demand zone. Right? And then that is when we just continue waiting until eventually we get our entry model. We get the market shift that tell us that the internal structure, the lower time frame structure have shifted bullish. This is when you can potentially drop down to your 15-minute time frame, the lower time frame, and let's just observe to see whether our entry model present itself. Right? Let's see whether this demand zone actually hold. Okay, cool. Nope. You can see it completely just blew right past it. So we know that this is not the demand zone that we want to trade from, so we can just delete it. Cool, let's go back up to the 4-hour time frame and continue waiting. Like I said, patience is the name of the game. This is what separates professionals from retail amateur traders. You guys just like to rush things because you want to get rich ASAP. No, just be patient, alright? So you can just wait. Price just blow right past this point of interest as well. But this is when we start getting some form of market shift. You can see, this is where demand step into the market and overwhelm the sellers, right? Just by looking at the candlesticks, we know that a lot of demand have stepped into the market. Cool, let's just jump down to the 15-minute time frame since price has already mitigated this demand zone, right? So let's just go down there, and this is when we want to look for the market shift. Remember, we want to see our entry model present itself, right? So over here, this is when we know that, okay, we got our entry model right here. Okay, so over here, price has already mitigated this demand zone, right? And that is when we are looking for our market shift. Now, how do we know the market shift has happened? We just continue to map out the internal structure, the lower time frame structure. We know that this is the internal break of structure to the downside, right? You can see price has just been creating a bearish break of structure to the downside. And since then, this is the last bearish break of structure. Right, so since this is the last bearish break of structure, we can identify that the highest point is basically this area right here. So this is the last swing high, right? So this is the last high, and the minute price actually broke past the last high, that is when we got our market shift. Remember, for a break of structure to be valid, the candlestick must close below the last low, right? So that is why in this case, right here, when price came down here, break past this last low, it did not close below it, right? It's just a candlestick wick break, so it does not count as a valid break of structure. So later on, price actually did close below the last low, so this is the last valid break of structure. And once again, to determine your last high, you just draw a box, right? From the last low to the point where it break past the last low, and then you just drag it all the way up there, and you determine the highest point, which is this one right here. So this is actually your last lower high. And since price has just broken past the last lower high, that is when we got our market shift. That is the first criteria, right? So the first criteria has been met. We got our market shift. The second criteria is that we want to look for some form of liquidity to be swept. And once again, you want to ask yourself, where is the available liquidity? And remember, I said that below every swing low, there is going to be available liquidity, right? So based on this, we know that over here, where price came down into this demand zone and started reversing, this is when most retail traders, they will start entering for a buy position. Because they see price stepping to the demand zone, they enter for a buy and happy-go-lucky thinking that price is going to go up right now. And then they place their stop loss below this last low, right? So there is available liquidity below this low right here. And we know better than that. We know that potentially price is going to come down there and sweep the available liquidity before it started reversing. And that is when later on, price actually came down here, right? Reverse. And then came down here again, swept all the available liquidity below these lows right here, trigger out all the retail traders stop loss, and that is when price reversed and hit back up. You can see this is a very sharp V-shaped movement. Now, after this liquidity sweep, after this V-shaped reaction, what does this tell us? This tells us that the smart money, they have entered into the market. Now, as retail traders, we want to trade with the smart money. We want to follow their footprints. So this was the second criteria, was that liquidity sweep. So now that we got our liquidity sweep and we gotten our market shift, the next step is to wait for price to come back to the demand zone that actually created this market shift. So that is when you want to identify the demand zone that created this market shift, and it will be this consolidation right here. You can see this is where price consolidate here a little bit before demand step to the market and push price up. So this is when we know that, okay, cool, this is the demand zone that created the market shift, and that is when you can place your entry order, your buy limit order at the edge of the zone itself, place your stop loss below the zone. As for your take profit, like I said, you can either put it at 1:3R, which is somewhere right around here, 1:3R, or you can place it at the opposing zone, which in this case is a supply zone, right? So in this case, I will actually mark this up as the nearest supply zone. So this is our nearest 15-minute supply zone right there, right? So like I said, either place it at 1:3R or place it at the nearest supply zone, right? And now we just wait for price to come back down here to the demand zone and trigger us into the trade itself, right? So you can see price consolidating, doing its thing. You're still being patient. You know, you are trusting in your plan, and boom, that is when you get into the trade right there. So right now, your buy order has been triggered. You have placed your stop loss below this last demand zone. What next? Set and forget. You have placed your stop loss, you have placed your take profit, you have done your research, you have done your analysis, you have waited a few hours for this entry model to present itself. Now just wait for the trade to play out, right? Once again, you can see this is what makes trading so hard. It's the waiting, the fact that you cannot do anything, and the fact that the market is an irrational, uncontrollable, unpredictable beast, and there's nothing you can do about it. So place your stop loss, place your take profit, set and forget. Let's see how this trade play out. Boom, there we go. As simple as that, ladies and gents. Now we have hit our take profit. We can go pop a nice champagne or so and call it a day, and then reset and look for the next trading opportunity. Now, once again, why is this considered as a high probability setup? Because the lower time frame right now has turned bullish since we gotten this market shift, and the lower time frame is aligned with our higher time frame trend, which is bullish. So if you want, you can even be more ambitious to target this 4-hour swing high. But I wouldn't recommend you to do this unless you have a lot of experience, because what can potentially happen is that price can start to turn bullish and just goes up like this and reach this supply zone right here, and then it starts coming down and just continue to consolidate around here. That is when I don't want you to be stuck in this little consolidation for weeks, right? I just want you to get in and get out of the market fast, but not too fast. And yeah, that's basically how you utilize this 3-step simple system. So now let's say for some reason you actually didn't manage to get your entry here. What's the next window of opportunity? The next window of opportunity is once again to wait for price to pull back. Because right now we know that right now price has turned bullish, right? And we know that this is our new higher high and this is our new higher low. And right now price has just created another bullish break of structure to the upside. And after a break of structure, we know that price is going to start pulling back. And where is it going to pull back to? It's going to pull back to some sort of demand zone, right? So in this case, this is the entire demand zone that led to this break of structure, right? So that is when you can place another buy order right here at this new demand zone, and then simply wait for price to come back down, mitigate this area right here, and that is when you enter for a buy. It's the same thing. Like I said earlier, price is fractal. If you look at this, we literally did the same thing on the 4-hour time frame, right? So just wait for price to come back down to this demand zone that created this break of structure, and then for you to get triggered into the trade. So in this case, just wait. Boom, that is when you get triggered into the trade right here at the edge of the zone once again, and you place your take profit either at +3R, right? Like what we've done right here, +3R, or at the nearest supply zone, which will be this supply zone right there. And then just wait for price to play out. And there you have it. As simple as that, guys. I'm literally not kidding when I say that this is how you really capture those high probability setups, right? Because what happens is really the lower time frame right now is bullish, the higher time frame is bullish, and that is when we are able to capture these nice setups. When I pull up a blank chart just like this, the first thing I want to do is to build a narrative of the higher time frame. I want to know what's the overall order flow of the market. What is the higher time frame market structure doing? What is the lower time frame market structure doing? Whether it is bullish or bearish, or whether price is in a push phase or the pullback phase. So right now, like I said, our job is to really look at the higher time frame to see what sort of range we are playing in right now. And you can see right now we're on a daily time frame, and if you look at the market structure, price is in a bearish order flow. How do we know that? Price goes down, pullback, goes down, and then pullback, creating a lower high, and right now price seems to be creating a new lower low. So price has just broke through the last lower low, which is this low right here. Right, this is the last lower low, and price has just broke through it, creating our break of structure. So right now, what we are basically seeing is downtrend market structure. Price is in a bearish order flow on the higher time frames, on the daily time frame. So at this point of time, after price break structure, what are we expecting price to do? We are expecting price to pull back. Okay, because remember, price will never go down in a straight line or go up in a straight line. It has to go down, pull back a little bit, go down and pull back a little bit, and then go down even further, breaking through the last low, and then starts pulling back. So that is basically what we are expecting price to do after price has just broke structure. And at this point of time, you must be asking yourself, where is price going to pull back to, and where is price going to start pulling back? That is when we make use of our supply and demand zones, right? Price is most likely going to pull back to a supply zone that actually created the lower high right here. So at this lower high, there's going to be some sort of supply zone, right, that cause, supply to step into market and the sellers to push price all the way down here. So there we have probably some sort of supply zone. So we are basically expecting price to pull back up to this supply zone and then continue with the overall bearish order flow, right? This is when supply will step back into the market and push the price down to go down even lower to create your new low. Now, that is where price is going to pull back to. Next thing you must ask yourself is, where is price going to start pulling back? And it's most likely going to start pulling back at some sort of demand zone that we have in the past, unmitigated demand zone, right? Maybe there's a demand zone right here that causes price to push up, right? So this demand zone is basically going to cause price to start pulling back, right? And that is basically all you need to know in terms of market structure and supply and demand. I just simplified that in like freaking 1 minute, which is crazy. So what happened right here is that after price broke structure, you are anticipating that pullback. And like I said, where is price going to pull back to? You look towards your left and you basically try to identify all the demand zones that we have right here. So I'll go down to like the 4-hour time frame to see. You can see there is a demand zone at this area right here. This is when price push, starts pulling back, consolidate a little bit before demand step into the market and push price all the way up here. So this entire range right here would be your demand zone. But as you can see, price has already bypassed that, right? So I wouldn't really regard this as a valid demand zone anymore, since it has been completely taken out. Now you want to ask yourself, where's the next demand zone? Once again, zoom back a little bit and just go back a little bit, and you can see this is where your imbalance step into the market. You can see right here, there's a lot of imbalance right here where buyers step inside the market, push the price up, and resulting in this huge move right here. After price goes up, pull back, and then goes up even further. So what we can do is that we can mark out like a little, this range right here, this would be your demand zone, right? So this is the next point of interest that price is potentially gonna go to. And you can see price is already at that point of interest, right? Price is already at the demand zone. So now our job is to observe what price is gonna do next. We don't want to enter for a sell here, because if you enter for a sell here, your stop loss will be above the last lower high, which is this one or even this one right here. And your take profit could maybe just be at the next point of interest, the next demand zone, which is right here. And you can see how this is a very bad risk to reward decision. This is a very unprofitable, a low quality trade setup, a low probability trade setup. Because right now price is in the demand zone, and right now we are expecting price to pull back. And what you can also do to keep things really simple and clean is also to identify the swing trading range that we are basically playing within, right? So I'll basically just zoom in to see what price is doing right here, because you don't want to be caring about all this noise that we have right here. All of these are just noise. All of these are just distraction. So you zoom into what price is doing right here, and you can mark up the swing high that we have right here. This is your swing high. So I'll put that as a swing high right there. And then I'll place like a normal line right there. And then there is your swing low that we have right here. So basically, we are basically going to be playing within this range, right? This is your high, and this is your low. So we are basically going to be focusing on what price is doing within this range. And once price starts pulling back at this area right here, creating that higher high and higher low, right, then we can anticipate price to potentially come up to this swing high that we have right there to mitigate it. So at this point of time, once again, we have identified our swing range. We know that the overall higher time frame order flow is bearish, and we know that price has just broke structural, and right now we are anticipating that pullback to happen. So I'm just going to play price forward a little bit to see what price does. And you can see, okay, you can see this is a sign that tells us that, you know what, maybe the bulls are about to enter into the market at this demand zone to push price up. The pullback is about to start happening, right? So right now, this will be your counter trend trade setup, right? If you're entering for trades over here, higher probability trade setup will be to enter for buy position, because you're playing that counter trend pullback, and you know for a fact that price is gonna turn bullish for a short amount of time to actually facilitate that pullback before price hit the some sort of higher time frame supply zone and continue going down even further. So that is basically what we are visualizing in our head. So at this point of time, I'm gonna see what price does at this demand zone that we have right here, at this swing low being formed right there. So right now we're in the 4 hour time frame, and I can see where is the last lower high, right? Based on minor structure, the last lower high will be this one right here, right? This will be the last lower high that we have right there. Maybe this one I can just get refine it to like this. Yeah, we just put it like that. So at this point of time, this is the last lower high. So in order for price to turn bullish, I believe that price has to break through the last lower high to confirm to us that the bulls have officially stepped into the market, and then maybe start creating a pullback and then go up even further. Then that is when you can look for your long positions, your buy position. So at this point of time, I'm still going to be waiting, but this is a very good sign that tells us that demand have stepped into the market. And if you look closely, guess what? We also have our liquidity sweep right here. Right, remember, below a swing low like this, there is going to be liquidity build up below this swing low. Why? Because a lot of retail traders, when they see price reversing at this demand zone, they will immediately enter for a buy right there, and they're going to be placing the stop loss below this low right there. And when that happens, look at them, they just got stopped out. Smart money was able to come down here, sweep the available liquidity below this low, and then potentially going to push price down, up. So right now, let's continue to see what price does, but we can just mark up a liquidity sweep happen right here first, right there. So you can see price goes up and creating our market shift, a shift of structure, which tells us that right now, this bearish trend that we have right here is gone, right? The bearish order flow is gone. And right now, we should only be looking for buys. We should play long positions. We should basically stack our buy setups, right? So at this point of time, we know that the structure has shifted from bearish to bullish, and price has flipped from supply to demand, right? So I can mark out my market shift right now. So right now, I'm looking for my entry, since price has already gave me a confirmation that the market has shifted bullish. So at this point of time, I don't want to enter right here once again, because price can easily come up here, and this could just be a liquidity sweep on these highs right there, and then continue to go down even further. I want the extra confirmation. After price actually comes down here, create that higher low, this gives us that extra confirmation for us to actually enter into the trade. So at this point of time, I'm still waiting to see whether price comes down here, and most likely I'm going to be marking some sort of point of interest right here to actually signify my entry area. So I'll go down to the 15-minute time frame to look for my entries, and you can see there's an area right here. This will be your demand zone. The demand zone right here, this will be basically an area where there is also a flip zone, because this is where price actually reacted from this supply zone and then come down here and creating a flip zone right there, right? And actually shifted from supply to demand. So there's also a flip zone there as well. So at this point of time, I'm waiting for price to come back, or rather pull back to this point of interest. Then I'll look for my entries. So I'll see what happens next. And you can see price started pulling back, right? This point of time, I'm starting pulling back to this point of interest right here. And I almost forgot, but this is the first point of interest. And then there is also an extreme zone right here. There's also an extreme zone right here, extreme point of interest right here, because this is also when price actually had that huge mitigation, right? That huge demand step into the market and actually pivot and hit back up. So this is a very strong area as well. Strong demand zone or order block, whatever you like to call it, right? So at this point of time, the question I'm asking myself is, which one is it gonna react from? It could come down to this area right here and react from this area. or it can even come down all the way down to this area here and then react from this area. And the truth is, I don't have a goddamn crystal ball. I don't know which one is it gonna react from. But what we do as traders is to react to the market. Just like what Bruce Lee said, be water, my friend. What does Bruce Lee mean when he said that? Be water, my friend. That means you need to be flexible in terms of your approach. You need to be adaptive. You need to adapt to what the market is showing you rather than imposing your bias onto the market itself. So at this point of time, right, price has come down to this area right here. So I'm seeing to see whether price actually react from this area that we have right here or no. So you can see price is coming down even lower, tapping inside this zone, and boom, it completely bypassed this area that we have right here, this demand zone that we have right here. And let's just pull back a little bit, right? It completely bypassed this demand zone that we have right there, so we can just remove this. And right now, since it's completely disregarded this, where should we expect price to go next? To this extreme zone that we have right here. So at this point of time, you can wait, you can see boom, price step into the extreme zone. Right now, this is where I will go down to the 1 minute time frame to look for my sniper entries. The key is in the details. This is where you get the sniper entries, guys. If you can go down to the 1 minute time frame and execute this successfully, you will be able to get those high risk to reward ratio trade setups that you see your favorite trader does. You know, those 1:20 risk to reward ratio, 1:30 risk to reward ratio trade setups, right? So you go down to the 1 minute time frame and you can see what price is doing at this demand zone that we have right here. Bear in mind, this is when there was a large amount of demand stepping into the market that we can see right here, right? Large demand step into the market. And if you look towards the left, there is also your liquidity sweep right here where price actually created a V-shaped reaction. And then right now, price come back up, come back down to this sweep zone that we have right here and then reacted from it. So at this point of time, we are at this strong point of interest where we know for a fact that demand have entered into the market where we know for a fact that smart money have entered into the market in the past at this point of interest, at this price point. So we can expect smart money to actually enter into the trade at this price point as well. So at this point of time, I'm going to be observing to see what price does here at this demand zone. And you can see price creating this low right here. Once again, liquidity build up right here. And then this is when price swept the available liquidity that we have below these lows. And then where's the last lower high, right? This would be the last lower high right here. That will be the last lower high. And right now, since price actually broke through it, it pretty much confirmed to us that price have shifted from bearish to bullish. And right now, the 1 minute time frame structure is aligned with the 15 minute time frame structure, which show us that price is turning bullish to facilitate the pullback of the higher time frames. So at this point of time, right, I'm looking for my entry. Slowly, you can see this somewhere right around here. This is when you can potentially look for your entry trade setup right here. You know, you got that demand being built up right here. You can wait for price to actually pull back to this area right here. And that is what I'll potentially do. You can see that pivot happened right here after creating that market shift. And right now, I'm waiting for price to pull back to this demand zone here. Right, you can see right now it's still building up at this demand area right here. And you can see we got a very nice pullback right here. So this is where you can potentially look for some nice entry trade setup. But we'll wait and see. Okay, you can see price is reacting to this extreme zone first. Right, extreme zone first. Once again, the extreme order block that we have right there seems to be reacting to it. And we'll see what price does right there. And boom, somewhere right around here, what we have is your mitigation of demand, right? Where price actually pulls back into this area here, mitigate this extreme area right here, and then goes up and actually creating this demand zone that we have right here, where there's a lot of imbalance of demand step into the market. So this is a sign that tells us that price is turning bullish. No, price is already turned bullish. This is a sign that tells us that price is going to skyrocket, right? So at this point of time, you can look for your entries somewhere right around here where price actually created this imbalance. Or if you want to be even safer, you can wait for price to actually pull back to this area right here. Right, but this is honestly a good sign for me to actually enter for the trade, right? Where price actually mitigated this area right here. And most likely I'll be placing my stop loss below these lows right there. And this is when you can target the next swing high on the 15-minute time frame, right? This is really where you are able to get those sniper entries, right? We enter on the 1 minute time frame, and then right now on the 15-minute time frame, we can look to target at this swing high that we have right here, right? So if you look towards the left, this is where price actually goes down, pull back, give us a supply right here, consolidate at this area right here, and then push down even further. So this is a supply zone that you can potentially target right there. Or if you want to swing for the fences, you can even target this high that we have right here. And this is where like the interesting thing really happens, right? If you go all the way up to the 4-hour time frame, right? Or rather the 1-hour time frame, you can see, like what we have mentioned just now, price is turning bullish to facilitate the pullback on the higher time frame order flow. So we are expecting price to pull back to where? To this supply zone that we have right here. So let me just mark up this supply zone right here. You can see this entire area right here. This is your supply zone. Right, this is where large amount of supply step into the market and push the price all the way down here, leading to a break of structure right there. So right now, like I said, price is gonna turn bullish to facilitate that higher time frame pullback. Because bear in mind, the higher time frame order flow is still bearish, right? Everything is still bearish, everything is still going back down. But right now, price is just gonna turn bullish for a short amount of time to, once again, pull back to where? Where is it gonna pull back to? To this supply zone that we have right here before it wreck from this area and potentially goes down there and create a new low. This is really the key, guys. Right now, that is basically tell us that, okay, the time frame, the immediate bias is bullish on the higher time frame. On the 4-hour time frame, it is bullish. On the 1-hour time frame, it is bullish. On the 15-minute time frame, it is bullish. And on the 1-minute time frame, it is bullish. All the time frame is aligned to our favor. So what you can potentially do is that instead of taking profit at this like little swing high that we have right here, right? You can even swing for the fences by targeting all the way up here at this higher time frame supply zone that we have right here. And this will be a 1:72 risk to reward ratio trade setup, right? Just look at this number right here. I will drag it out, but it's just so ridiculous, right? This is completely insane. You don't know how insane this is. This is like risking $100 to make $7,200. Can you imagine that? Risking $100 to make $7,200, or risking $1,000 to make $72,000. You know how insane that is? It's freaking insane. That is why I tell you guys, if you can master these sniper entries and you trade like a sniper, you will be able to bank consistent profits and increase your win rate and increase your risk to reward ratio, and you will be able to really maximize your profits, right? But this is really the best case scenario where there is no drawdown whatsoever after price just goes up like this, right? That's the best case scenario. But more often than not, this is obviously not a very realistic trade setup, right? This is just like swinging for the fences, you know. What price can potentially do is you could go up there and then come down here, tap into this area again before going up even further. In that case, you would just get stopped out. So I wouldn't personally do this, but what I'm saying is that you can, right? You can do this. If you get really good at entries, this will be the type of entries that you get. But let's say that you're not so good yet, let's just target at this area right here, this last swing high that we have, this last supply zone, right? Let's just be realistic first, because right now you're broke. Your next goal is to not be broke. It's not to be rich, but not be broke. It's to break even. It's to stop losing money. That is your next goal, all right? So at this point of time, we got tapped into the trade. Right now, this is on the 1-minute time frame, you can see we got tapped into the trade, and right now, you can observe to see what price does here. Okay, this is gonna take forever, honestly. Maybe not, maybe it's not gonna take forever, but this is the 1:13, which is still not bad, right? You're risking 1% to 13%, and 13% is actually pretty good, because if you think about it, right, 13% in 1 month, that is like better than professional traders. Professional traders get like 5 to 10% return on investment per month. So 13% is pretty damn good. Yeah, as you can see, eventually price goes up there and smash your take profit right there. You can see, if you're on a 1-minute time frame, you can see price has already smashed your take profit, and that is how you get those sniper entries, ladies and gents. Now, what if, you know what, this is good, you close this, 1:13 risk to reward ratio trade setup, you're happy, what's next? For me, when I win a trade, I don't just sit there and celebrate with champagne whatsoever. I'm thinking about what's next. I don't rest on my victories. I'm thinking about what trade setup, what is the next opportunity that I can potentially take. So 1:13 right here, you're up 13%, happy days, boom, gone. Alright, we'll just move on to the next trade setup. So at this point of time, bear in mind, we are seeing what price is doing at this area right here, right? And remember, price haven't officially like start creating the higher time frame, the higher No, the bullish order flow. What am I speaking? Price have not officially started creating the higher highs and higher lows yet. It is still within this consolidation that we have right here, right? So it's still consolidating. Once again, this is very good, right? This is telling us that this bearish momentum is gone. That is why price is consolidating around at this area right here. And this is also your accumulation phase, where it states that smart money could be just stacking their buy orders at this area right here. They are buying here, they're buying here, they're buying here, buy here, buy here, buy here. They're basically stacking their buy orders at this demand zone so that eventually when price pulls back up there, guess what? They make a lot of profits. So at this point of time, right, I'm observing to see what price is doing, right? Maybe price will come down into this area again, or maybe it could not, right? So you can see what price is doing. Maybe we'll go down to the 1 hour time frame, 4 hour time frame. You can see right here. Right here, this is when your demand have stepped into the market, right? There's a demand zone being formed right there. You can see price seems to be mitigating this demand zone right here. And right now, price has officially starting the up move, right? This is the next swing high that we are looking forward for it to play out, right? Price can potentially go up there and break through this high right there, create a new higher high, and then pull back to and create a new higher low, and then create a higher high and higher low, a higher high, higher low like this. That higher time frame, that bullish order flow, right? The bullish market structure. So at this point of time, I'm still see what price does, and you can see price is respecting at this demand zone right here. So what you can potentially do is that you can enter for a buy somewhere right around here if you want. Once again, target this area right here. This will be a much more realistic trade setup right there. Right, again, that's something you can do, right? You can see price step into that demand zone, demand step into the market, push price up and up and up and up. And right now it just created that new higher high because price just broke through the last high that we have right now to create a new higher high. At this point of time, after price create a higher high, what are you expecting? You're expecting price to start pulling back on the lower time frames. You're expecting price to start pulling back to some sort of demand zone that we have right here, tap into it, and then create the new higher low and goes up even further, creating a new bullish break of structural, and then create a new higher low, so on and so forth. That is basically what you are expecting price to do, right? So at this point of time, price is going up and up, slowly it's going up. You can see it's creating new demand zones, right? This is the last demand zone, and there's a new demand zone right here. So once again, you can look for another entry somewhere right around here where price actually mitigated this demand zone right here, and then once again target this area right here. You can see price is just slowly playing in your favor right now. Right, goes up even further, right? Tap into this, taps into it. Okay, boom. Right here, this is when price could potentially sweeping the available liquidity that we have below these lows right there. Right, so let's say in this case you got stopped out, it's okay, we move on to the next trade. We are asking ourselves whether our trade idea is still valid, whether price is still bullish, and you can see price actually came down here to mitigate this little demand zone that we have right here, right? This demand zone right here mitigates it, and then go and you have also swept the available liquidity that we have below these lows right there. So this could be a much more better entry right there below this demand zone, and take profit at this area once again. And you can see, or you can even take profit just at like this swing high that we have being built up right there, right? You can see this is basically my thought process when I am trading. Okay, 1 is the 3, not so shabby. And then price goes up, smash your take profit, or once again you can take partial profits here, and you can have your overall take profit here, whatever you like to do to actually manage your trade setup. That is basically the case, right? And you can see price just goes up and up and up and up and up. Maybe we could go up to the 4-hour time frame, and you can see eventually price will most likely get up to this area right here. Right, once again, it's just going up, creating the higher highs and higher low, and boom, you smash your take profit right there. Ladies and gents, this is how you do it. Basically, what you are doing is that you are essentially waiting for that lower time frame structure to align with the higher time frame structure, and you are basically focusing heavily on market structure on the higher time frame, and then you're going down to the smaller time frame, like the 1 minute time frame, to look for your entries, right? And that is really how you get those sniper entries, right, guys? If you can really master this strategy, like I said, you will be able to massively increase your risk to reward ratio and bank profits consistently. Once again, you are gonna be very patient, right? I entered for this trade setup right here because I had all the confluences in the world that tells me that, okay, we are in that pullback phase, we are in that bullish order flow phase, and we have multiple confluence, we also have price at this demand zone right here, where we know for a fact that demand is stepping into this market, right? So like I said, you need to understand why the market move, how the market move in order to trade, not trade based on those stupid chart patterns, stupid retail trading concepts, following some candlestick patterns or whatnot. No, you have to understand why price move, how price move, and trade with a purpose. And that is how you win in the markets consistently. So in this scalping strategy, we are only going to be using 2 time frames. The higher time frame to build our narrative and the lower time frame to execute our trade when we see our entry model. Firstly, let's talk about the higher time frame. Now, it really all comes down to just 3 simple questions. Firstly, ask yourself, is price bullish or bearish? And then once you have identified the trend direction, determine whether price is in the continuation phase or the pullback phase. If price has just created a break of structure, we are anticipating price to start pulling back. And the last question you want to ask yourself is, where is the available liquidity? In the last lesson, we talked about inducement. So this lesson, we will actually start applying it, right? So over here, we know that when price goes up, pulls back, and then it goes up, before it actually went up, it actually did like a minor pullback just like this, creating a new swing low right here. So we know that below every swing low, there is going to be available liquidity, because retail traders, they're going to be entering for a buy right here, and they're going to be placing their stop loss below the swing low. So that is just available liquidity being built up right there. So in the future, we could expect price to come down there and take out all this available liquidity before we get that real move in price. So looking at a bullish scenario, after this break of structure, we are anticipating price to start pulling back, and then once price starts pulling back, we know that, okay, now we got this near demand zone, and then we also got this extreme demand zone, right? The extreme demand zone is that last line of defense that must hold in order for price to remain bullish, because it's literally at that last swing low, right? So when price is pulling back, firstly, it's going to pull back to the near zone, right? So when you pull back to the near demand zone right here, observe what price does. Okay, sometimes what could potentially happen is that price could just come into this near zone and then just starts going up, right? But I'll say 8 out of 10 times that doesn't actually happen. Price usually comes down to the extreme zone. Why? Because it needs some form of liquidity before the real move can actually happen. And right now, where is the available liquidity? Your third question. And if I look towards the left hand side, I will know that there is available liquidity below this swing low right here. Okay, so that was your inducement. So this is when, once again, a lot of retail traders, they will try to enter at the near zone, thinking that price is going to go up right now, and they're going to be placing a stop loss below the near demand zone. And when this happens, guess what? This just generates more available liquidity. So now we got liquidity right here on the left hand side. We also got liquidity on the right hand side. Now this is where the fun part actually happens, right? So price actually goes down, pulls back, right? Fake out all the retail traders before price comes down even further to this extreme zone. Sweep all the available liquidity from the left side and the right side before we get a strong move in price. Okay, so this is pretty much how you really determine your higher time frame objective. You always want to be asking yourself these 3 questions right here. Always make sure you are able to identify available liquidity, because if you cannot identify liquidity, then guess what? You are the liquidity. So always wait for that liquidity sweep before you actually enter for the trade. So once price hits your point of interest, whether it's the near demand zone or the extreme demand zone, you want to drop down to the lower time frame to look for your entry model, which I'm going to show you later after I actually went through this bearish scenario. And then once you find your entry model on the lower time frame, that is where you can just execute the trade with confidence, without hesitation, reservation, or fear. Now, before we move on to talk about the entry models, let's just go through the bearish scenario quickly. So firstly, price goes down, pulls back, and then when price is going down to break that last low, right, to create a new swing low, it created like a minor pullback just like this, right? And that just created like a later swing high that we have right here, and we know there's going to be available liquidity above this swing high. So right now, after the break of structure, we're anticipating price to start pulling back, and that is where price starts pulling back to the near zone first. Remember, it's always going to pull back to the near zone first. Once it pulls to the near zone, this is where you want to observe what price does. That is why I say that it's very important that you look for your entry model before you actually enter for the trade. You don't want to enter for a sell immediately right here because price step into this supply zone, because sometimes price can just do this, right? This could just be like a inducement to induce retail traders to enter for the trade early. So you always want to make sure that you get the entry model before you actually enter. So in this case right here, we know that this is just available liquidity being built up on the left hand side, on the right hand side, and then later on price comes up there, sweep the available liquidity from these highs right there before we get a real move. Okay, so once again, even though this is the extreme zone, there is no guarantee that it's gonna work. Okay, there is still a chance that price can just blow right past it, and then we get a market shift, and then price just shift bullish. So you always be patient, look for your entry model on the lower time frame after price step into your point of interest.
Hey, it's Future Brad here. So before I let you continue watching this awesome video, I've got a very important announcement to make. I've created 2 new YouTube channels. First of all, Brad Go Trades. This is where I will be documenting my live trades, and next year I plan to make $1 million in profits. So I'm going to be documenting all my live trades on this exclusive channel, Brad Go Trades. The second channel that I'm going to be launching is Brad Go Unfiltered. This is where I'll be posting raw reality videos, right? Like uncut videos just like this, where I just tell you guys what it's really like to become a 22-year-old millionaire and just give you some motivation on the way to get there, right? To help you get there. So yeah, these are the 2 new YouTube channels, so please go and subscribe, show some love. What's there for you to lose? You are literally broke, you are penniless, you have nothing to lose. So just go and subscribe, get some free value. I'm going to do my absolute best to make 2025 the best trading year for you. So yeah, go and hit on the subscribe button, and once those 2 channels hit about 50k or even 100k subscribers, I'm going to be doing a massive giveaway. Gonna fly one of you guys out to Singapore and have like a 3 days fully paid vacation. Alright, so yeah, now you can get back to watching this video and learn about the awesome entry models that I'm about to show you.
So here's the secret entry model. It's called the flip plus sweep entry model. This is 1 out of 6 different entry models that we have inside the 1% club, right? So after price step into your point of interest, that is where you want to drop down to your lower time frame to look for either one of this entry model before you actually enter to the trade, right? So for your lower time frame, you can either use the 5-minute time frame or the 1-minute time frame. Now, I wouldn't advise you to actually use the 1-minute time frame unless you are very experienced, because trading on the 1-minute time frame is like a whole different ball game, because there's so many different false signals. So if you're like a beginner, or even if you're like an intermediate trader, you should just stick to the 5-minute time frame first, because if you cannot master the 5-minute time frame, you will not master the 1-minute time frame. Alright, and once you gain enough experience, eventually then you can dive deep into the 1-minute time frame. So when price steps into a demand zone in the bullish scenario, or a supply zone in the bearish scenario on the 15-minute time frame, that is where you can drop down to your lower time frame, which is the 5-minute time frame, and you look for this pattern or this pattern right here. Let me explain. When it comes to this entry model, you always want to make sure that you get the liquidity sweep before you actually look for your entry. When price is approaching a point of interest, it usually creates inducements just like this, where price comes down here, it creates some form of down bottom, or it's just like reverse like this. Once again, this is so that they can bait all the retail traders to enter early, just to build up available liquidity below the lows. So next thing you know, price comes down, sweep all the available liquidity before creating a sharp V-shaped reaction. So that's the first thing we want to look out for, that sharp V-shaped reaction, which tell us that all the retail traders, they have been stopped out, they are gone from the market, and that is where the strong move, the real move, is potentially going to happen very soon. So after you get the liquidity sweep, what you want to look for next is some form of flip zone. So flip zones are basically those zones that cause other zones to fail. Here's what I mean. So when price is going down just like this, we know that there's a supply zone right here, because at this point of time, this is where supply steps into the market and cause price to go down just like this. And the next thing you know, price comes up to react to this supply zone. So if this supply zone were to do its job, price will continue going down even further, right, taking out this low. But in this case, we got a failed reaction, where price reacted from this supply zone, but it failed to take out this low right here, and it just went up just like this. When this happens, we know that a flip zone is formed. Remember, the reaction is key, because this reaction shows us that this supply zone does its job, but it did not follow through. There was not enough supply to cause price to actually take out this low right here, which means at some point of time, demand actually overpowered the supply right here. When this happens, this is where we got our flip zone right here. But remember, this is the flip plus sweep entry model. This is not a flip zone entry model, which means once again, you want to wait for liquidity to be swept before you actually enter. So in this case right here, when this flip zone was formed, when we got that failed reaction, guess what? A new swing low is formed. And we know that at this swing low, there is gonna be available liquidity below the low. So now, instead of entering right here, we want to wait for price to create that flip plus sweep zone. So price later come down here, sweep the available liquidity below this swing low, give us our flip plus sweep zone before we get price goes up there and creating that market shift, which confirmed to us there's a shift in structure and price has officially shifted from bearish to bullish. Demand has overpowered supply, and right now we are about to go now. So after this flip plus sweep zone is formed, you are just simply waiting for price to pull back after the market shift to your flip plus sweep zone, and that is where you enter your trade right here, and you can target 3R. Now, I know all this might sound super overwhelming or confusing, but it really all boils down to 4 simple steps. You wait for your liquidity sweep, you wait for your flip plus sweep, you wait for your market shift, and then you enter at the flip plus sweep zone. Before we go into the charts to look at some examples, here's what this entry model looks like in the bearish scenario. So once again, we got price approaching the higher time frame point of interest, the higher time frame supply zone on the 15-minute time frame, right? When this happens, guess what? There is going to be inducements, right? This is once again to bait all the retail traders to enter early. Later on, price comes up there, sweep the available liquidity above the inducement before we get that sharp V-shaped reaction. Remember, we need that sharp V-shaped reaction to confirm to us liquidity has been swept. Once that is done, step 2, wait for your flip, right? So once you got a flip right here, we got a failed reaction where price actually reacted from this demand zone but failed to take out this high right here. That is where we are patiently waiting for the liquidity above the flip zone to be swept to give us our flip plus sweep zone. So price later go up there, sweep the available liquidity above the flip zone, and then that is where we got our flip plus sweep zone is formed, and that led to the market shift right here. So now all we are doing is to wait for price to come back up to our flip plus sweep zone, and bam, that is where we look for our entry. So this is what the entire scalping strategy looks like at a high level. So if you want a copy of this, you can just go to the description and just download it. There's like a link below it. Yes, you can download it for completely free. I'm not gonna charge you like $49 for this or something. It's completely free. Link in the description. Now let's go to the charts and apply this scalping strategy. So first of all, we are on USD JPY. We are on a 15-minute time frame. This is where we want to determine our higher time frame objective, right? So we know that price is pulling back right here after price has already gave us a break of structure to the upside, just like this. And when price actually created this break of structure, it did not just go up immediately, you know. Price actually goes up, pulls back, create like a minor pullback just like this before the real move actually happens. So we know that there is your extreme demand zone, and then there is your near demand zone that we have right here. Okay, and right now you can see price has completely disregard the near zone and is going down to our extreme zone. So we can just pretty much erase this. Right, this is why I say that the near zone is always quite unreliable. This is not to say that the near zone is not going to work, because sometimes it does work. Sometimes we get price moving up immediately after it hit into this near zone rather than the extreme zone. But I'll say, like, based on statistics, most of the time it tends to come down to this extreme zone, because that is where, you know, liquidity gets swept. So once price steps into this extreme zone, you must understand that this is indeed that last line of defense, because this is that last swing low that led to this break of structure. So if price actually come down and take out this swing low, price is shifting bearish, right? Price is literally taking out this last swing low, shifting bearish, and right now we're gonna start creating lower highs and lower lows. So in order for price to remain bullish on the 15-minute time frame, this demand zone has to hold. So once price step into this extreme zone, that is where you drop down to your 5-minute time frame to look for your entry model. So let me just go right to the 5-minute time frame right there. Okay, so right here, what do we have? We got price reacting, right? Demand stepping into the market, and look at what price does. Price come down there, take out some good old liquidity, right, before actually getting that real move. So when this happens, we see a very, very sharp and obvious V-shaped reaction, which tells us that price has officially swept the available liquidity that we have below this swing low right here. Okay, so this is our liquidity sweep. That's the first thing you want to see from this entry model itself. Okay, and then right now, this is that last internal lower high. So if price create a market shift, takes out this last internal lower high and create a market shift, that is where price is gonna shift from bearish to bullish on the internal structure. And right now we know that price is gonna start going to the moon. Okay, but at this point of time, look at what we got. Price is reacting from this little supply right here. Okay, but before that actually happens, I want you to observe what price does. Over here, this was a supply zone. How do we know this is a supply zone? Because after this supply zone, lots of supply stepped into the market and caused price to go all the way back down. Okay, so right now, the next thing we want to see is obviously that flip zone, right? We want to see that failed reaction. Then we want to wait for that flip zone to be swept before we actually enter for the trade. Okay, so let me just go down to the 1 minute time frame a little bit. Okay, you can see price comes down here. Okay, you can see this flip zone is doing its job, right? We got price goes up, creating that flip. Okay, you can see a flip right here before price actually potentially could start going up. Right there, let me just continue to see what price does. There we go. Right, you can see what happened over here. Just a quick recap was that price goes up, pulls back, creating the failed reaction, and then later on price goes up there, and we know that there is available liquidity below this low right here, and then later on price comes down, sweep all the available liquidity below these lows before we get that strong flip plus sweep right there. So at this point of time, I have identified my flip plus sweep zone. I know that this entire area, this entire point of interest that we have right here was our flip plus sweep zone. So that is where I'll just put this blue zone right there. And then we know that this liquidity has been swept as well. And now we are just waiting for the market shift. But in this case, right, the market shift has already happened, where price went up there and closed above this last high right here. So now looking at this, we pretty much got all our criteria checked. So now it all comes down to just waiting for price to pull back to my flip plus sweep zone that we have right here. And then that is where I can look for my entry. I'll place my stop loss below this flip plus sweep zone right there. And then I'll place my take profit at 3R, just like this. Okay, so later on price comes down, boom, tap us into the trade right there. Very, very beautiful entry. And then bam, that is where we got out. Very, very fast, 1 to 3R, just like this. And this took place in less than an hour or so. Wait, no, this actually took place in less than 30 minutes, right? So within 30 minutes, you just caught this 1 to 3R trade. As simple as that. Now, before we move on to the next example, here's a quick recap on what just happened. So we know that on a 15-minute time frame, right, price is pulling back after this break of structure and it pull back to this extreme zone. And we know that this extreme zone has to hold in order for price to remain bullish. So once price step into this 15-minute zone, we jump down to the 5-minute time frame to look for our entry model. And what happened was that we saw a liquidity sweep in price, and then later on price created a flip zone. But remember, we don't want to enter on a flip zone, we want to enter on a flip plus sweeps, right? So we waited for that flip zone to be swept, and then we also got our market shift, which confirmed to us there's a shift in structure, and this internal structure has turned bullish before we finally get our entry where price step back into that flip plus sweep zone. Just like this, place our stop loss below the flip plus sweep zone, and we targeted 3R. So the second example is going to be a bearish scenario, right? So what we have over here was that price goes down, pulls back, and then goes back down, right? So we know that this was a bearish break of structure to the downside. And you must be asking yourself, what actually led to this break of structure? We know that there's going to be some form of supply zone, right? So you look towards the left hand side, you see that this entire range right here, you can draw this as your supply zone. Okay, so this will be our 15-minute supply zone, and then drag it all the way up here, and you can see price has already mitigated that supply zone. Cool. So this is a little bit too early, so let's just maybe jump back right here. Okay, so when price is approaching this supply zone, remember, sometimes it's going to create inducement just like this to bait all the retail traders to enter early, right? So retail traders enter for sell right here, they're going to be placing a stop loss above this high right here immediately. And when that happens, we know that there is just available liquidity being built up right here, which is going to be swept later on. So later on, price goes up, boom, sweep the available liquidity. Once again, sharp V-shaped reaction. That is where our first criteria has been met. Now, once price actually tapped into this 15-minute supply zone, we would have already jumped down to the 5-minute time frame to look for our entry. And that is where, after that liquidity sweep, what are we waiting for? We are waiting for that flip plus sweep to be formed. And if I look at right here, I know that there is a demand zone right here. This is our 15-minute demand that caused price to actually goes up there. So right now we want to see that failed reaction. We want to see price react from this demand zone, goes up, but it fails to take out this high. Okay, remember this reaction is key. Without this reaction, we cannot tell that there's actually a flip zone, right? So once we actually get a failed reaction, that is where we wait for price to sweep the available liquidity above this high right here before we get that real move. Price comes down, potentially create a market shift, and then we're just waiting for price to pull back to this flip plus sweep zone, and then we get our entry right there. Okay, so now let's just continue to play price forward and see what price does. Boom, failed reaction is being formed right here. You can see beautiful swing high being formed right here. Okay, we know that there's available liquidity right here. Wait for that liquidity to be swept as well. Okay, you can see right there, price actually swept the liquidity above this swing high right there. That is where we have our beautiful flip plus sweep zone right there, ladies and gents. And then that is where we are waiting for the next criteria is the market shift, right? Remember, all of this might sound good, but if you don't get the market shift, you cannot be entering for the trade, right? Market shift is essential because it tells you that the internal structure has shifted, right? It has shifted from bullish to bearish, which tells us that this pullback is over, and right now supply is going to come into the market and cause price to start going down, and the lower time frame trend is going to be aligned with the higher time frame trend. So yeah, that's how important the market shift is. I never ever enter for a trade without some form of market shift. Okay, so later on price comes down there. Okay, wait, no, this is actually the flip plus sweep zone, right? So right here, this was just a flip zone. See, this is why you must be very patient when it comes to entry. You don't enter here. No, you wait. Okay, so price reacted from this demand zone, failed reaction, price comes down there. And then it went up there, sweep the available liquidity above that flip zone. Real flip plus sweep zone is being formed right there. And then we got the market shift to the downside right there. Beautiful. Sorry, so yeah, this is where we actually wait for price to pull back to this flip zone. And then that is where we enter at the edge of the flip zone itself. Okay, so price goes down. Okay, it goes down. We are very patient, right? We are not doing anything. We are not rushing to enter for a sell right here. Because if you enter for a sell like right here, your entry is gonna, your stop loss is gonna be all the way up here, right? So that's not really ideal for us. Remember, we want to get those sniper entries. We want to trade with precision, right? So we wait for price to pull back to our desired point of interest, which in this case is a flip plus sweep zone, before actually looking for the entry. Okay, so later on price goes up, eventually pull back up to this flip plus sweep zone, right? Beautifully tap us into the trade, place our stop loss above this flip plus sweep zone, and that is where we can target just 3R, right? Just 3R, which is just like this, okay? And then boom, price goes down, we are in profit. Beautiful people. And this trade took a little bit longer, but I believe it eventually played out very nicely right there. Right, so this one took about a few hours, right? So this would have actually been like a more of like an intraday trade. But obviously you could have gotten like a much better entry on the 1 minute time frame and make this like a scalp trade, right? So let me just show you what that will look like. So when price actually tap into this point of interest, right, what you could have potentially done is to go down to the 1 minute time frame, right? You could have refined this flip plus sweep zone to just this extreme zone right here, right? You can see you keep it very refined right there, and then you enter when price actually tap into this zone on the 1 minute time frame. Once again, same thing, you place the stop loss above this zone, right? And you just target once the 3R, which is just like this. Okay, so in this case, let's see what price does. Okay, price tap us in the trade right there. Okay, you can see this is how we really get those sniper entries, right? And price goes down, and eventually goes all the way down to our TP right there. Okay, so you can see this happened in less than an hour or so, right? Less than an hour, we managed to take profit and get the hell out of there, right? And this is really how you get those sniper entries. So yeah, you should only do this when you're like quite experienced, because like I said, if you don't have any experience whatsoever, you're beginner, do not go down to the 1 minute time frame, because you will literally suffer from all these different false breakouts and just gonna be super duper loss, right? So don't do that. But if you're like more like an advanced trader, you know what you are doing, then yeah, this is where you can go down to the 1 minute time frame, look for that sniper entry and enter with precision. So what we have on the screen right now is the simplified mechanical trade plan on the right hand side and the charts on the left hand side. So usually when I'm marking on my charts, I'm going to be having the trade plan open right next to my chart so that I can just refer to it and ensure that I go through the checklist inside the trade plan itself, right? And if there's a trade that meets the criteria, I'll take the trade. And if there's no opportunities, then I'll just stay out of the market. It's really important that you have some form of structure in your trading, because if you want to get consistent profits, you need to have consistent actions, right? So having a mechanical trade plan just like this allow me to trade with confidence, without guesswork or emotions whatsoever. So first of all, when we look at this chart on EURUSD, understand that for this simpler strategy, we are only going to be using one time frame, and that is the 15-minute time frame. So you can see the first step right here is to identify the 15-minute structure and the trend, right? So we know that price went down, pull back, and then goes down there and break past that last swing low that we have right here, giving us a bearish break of structure to the downside. Now, once we got this bearish break of structure, this is where we can identify our 15-minute swing high and our 15-minute swing low, right? So this is the 15-minute swing high because this is the highest point that led to the break of structure. Okay, so this will be our new 15-minute swing low right here. So in a downtrend just like this, we are expecting price to break past the low, right? Just continue creating lower highs and lower lows. So right now we have identified our 15-minute structure. We know that price is bearish, and right now, since price has just created a break of structure, we're anticipating price to start pulling back. Now, based on this, where is price gonna pull back to? Okay, it's most likely gonna pull back to some form of discount and premium pricing. Okay, so let me just change this order right here in the checklist. There we go. So in a downtrend, we are expecting price to pull back to the premium pricing, and in an uptrend, we are expecting price to pull back to a discount pricing. So now let me just draw the premium and discount from the swing high to the swing low, just like this. And you can see right here, this is the premium pricing and this is the discount pricing. So as usual, we are expecting price to pull back into this premium pricing since price in the downtrend. And then this is where more sellers will step into the market and cause price to go down even further. So at this point of time, we are still waiting to see what price does. We are still waiting for price to pull back to the premium pricing. You can see price just consolidating right here, and eventually it starts making that massive pullback into the premium pricing. Okay, so we check off the second box right here. Now, the third step is to determine where is the available liquidity, right? So when I'm looking at this swing range right here, we know that there is available liquidity above average swing high and below average swing low. And in the downtrend, just like this, we are looking for available liquidity above the swing highs to be swept. So based on this, we saw that price went down, pulls back, and then goes down even further, right? So this just tells us that there is available liquidity above this swing high itself. So that is why I put a liquidity indicator right there to tell me that right now price could potentially come up there and sweep the available liquidity above this high before it actually goes down. Okay, so based on this, we can also draw our supply zones. So this is a supply zone by itself because at this point of time, large amount of supply step into the market. And then there is also an extreme supply zone that we have right here. Okay, so this extreme supply zone right here is really the last line of defense because it's also our 15-minute strong high, right? So this zone has to hold in order for price to remain bearish. Okay, so now we know that there is available liquidity above this high. An additional step would be to look on the left hand side to see where the price sweep liquidity previously, right? So if I look towards the left hand side right here, I saw that price went up, pulls back, goes up, pulls back again, and then goes up, pulls back, and then eventually goes up there, and then does like a sharp down move, right? Have like a sharp V-shaped reaction just like this. And this is where we saw price sweeping the available liquidity from these highs right here before we get a strong move to the downside, and that strong move led to a break of structure, right? So based on this, I know that this right here, price has already swept the available liquidity above these highs, and then supply stepped into the market and caused price to go down just like this. So this is not just an ordinary supply zone, this is a high probability zone because it swept liquidity, right? So we have determined where the available liquidity is right here, which means when price actually comes up and approaches into this particular supply zone, we want to see this liquidity to be swept first, right? And just as expected, price did not hold at this supply zone whatsoever, because once again, this is where all the retail traders who enter for a sell right here place their stop loss above these highs right here. So remember, smart money needs some form of liquidity before the real move can actually happen. Okay, so now this zone has been demolished. Price has came up here and swept the available liquidity that we have above this swing high. this is where price has entered into our high probability supply zone that swept liquidity, right? So this is a high probability zone. Remember, we want to preserve our capital for the high probability zones. We don't want to take trades at low probability zones. We don't want to waste our hard-earned money on low quality setups which do not work whatsoever. We want to trade at a high probability zone and trade with precision. So the minute price enter into the 15-minute high probability zone that swept liquidity, what you could have done is that you could have placed like a sell limit order right here. Okay, just like a sell limit order right here at the edge of the zone itself. And then in that case, you will place your stop loss above the zone. And then for your take profit, you just place it at 3R, right? So you target 3R just like this. Okay, very, very simple trade, right? So if you just go back by one candlestick bar, you can see the minute price step into this zone, you place your entry limit order right here, you are into the trade, right? So at this point of time, boom, you are triggered into the trade right here, and then price just starts going in your way. And just like this, you've gotten out of the trade within like 30 minutes or so. You have closed the trade with a 3R profit. Literally as simple as that. And just like that, we have went through all 5 boxes, right? And that's really how you carry out this entire trade process. Okay, so another bonus tip would be to actually go down to the 5-minute to refine your zone if you want, right? So based on this, you can see, right, how we dropped this 15-minute supply zone was that we took this entire range that we have right here. But if you go down to the 15-minute time frame, you could probably refine this range right here to like this particular candle but itself, right? So if you do that, right, look at this, you will have gotten like a much better risk to reward. And this is really how we get those sniper entries, by going down to the lower time frame and refining the zone, making the zone even tighter so that your stop loss is also tighter as well, right? So yeah, that's that. So now what's next, right? What's next? Before I go and show you more examples, I want to explain to you what are the rules that we have inside this simplified trade plan. So this is the trade process right here, which I've already explained to you. And this is the trade management rules that we have, which states that we are taking full take profit at 3R itself. Okay, and we are also going for the set and forget method. That means we are not trailing our stop loss, we are not moving our stop loss, we are not taking partial profits whatsoever. Once we enter for the trade, we place our stop loss, we place our take profit, we just let it run, right? We trust our analysis. And if you look at this trade plan right here, the last thing that we have is our capital management rules. It's imperative that we have some form of rules to actually protect our downside, to protect our capital, right? So that we can actually reduce our losses. Just by reducing your losses, you are already halfway there to becoming a consistently profitable trader. So our capital management rule states that we are only going to be risking 1% of our total capital per trade. So if we have $100,000 in our capital, that is where we will only be risking $1,000 on each trade, right? So based on this, I will go on to a lot size calculator and determine what is the correct position size that I should be using based on my stop loss and based on my risk per trade. The next rule is max 3 losses per day, right? By having some form of max loss rule, this allows me, or rather this prevents me from over trading or revenge trading, because the last thing you want is for you to lose one time and you start getting angry at the market, you start punching your monitor, and the next thing you know, you enter another lousy trade and you lose even more money and you feel even more angry, and you just go into this downward spiral of revenge trading and over trading. So set a rule to limit the amount of losses that you can incur per day. So for me, that's 3 losses, right? Which means I essentially have 3 bullets per day, right? So I have 3 trade opportunities per day. If I trade 3 times and I lose all 3 times, I'm done trading for the day itself. I'm going to be closing the laptop, I'm going to be going to the gym, going for a walk in the park, or I don't know, just sit down there and watch Netflix or something if that's what you like. Now, I also have a rule that says that my stop loss has to be minimum 2 pips, right? So it cannot be less than 2 pips. The reason being, when you are scalping, right, when you are participating in high frequency trades, right, you're entering on the lower time frames, and that is where you can have like this insane stop loss. Like for example, right here, if I entered on the 1 minute time frame, I place my stop loss like this, right? When it's so goddamn tight, you must be very, very careful, because remember, there is a spread, that is a bid and ask spread that you actually pay to the broker when you actually enter into the trade itself, right? So by having like a minimum 2 pip stop loss, this takes into account the bid and ask spread as well, right? To ensure that I don't get stopped out because the broker is being stupid. So yeah, for the love of God, give your stop loss at least a little bit of breathing room, make it at least 2 pips. And as for the pairs that I'm trading, I'm going to be trading the most commonly traded pairs, EU, AU, and GU. And then as for the time, this is in Singapore time, but this is actually the London session or the New York session itself, right? So if there's no opportunity in the London session, sometimes I will trade during the New York session. So yeah, that's pretty much the entire simplified mechanical trade plan. Now, let me show you some more examples. Now, after you have got out of this trade right here, what I'm going to do is that I'm going to erase this and I'm going to start re-evaluating the situation, right? So I'll probably just get rid of all these little drawings that we have right here because I have chart OCD because, yeah, I'm just a tidy freak, all right? So yeah, let's see, price goes down. Okay, price goes down. Boom. There we have. What do we have? We got another break of structure to the downside. Now, the minute this actually happens, that is where we know that what is price going to do right now? Price is going to start pulling back, right? And once price starts pulling back, that is where we can identify, once again, our 15-minute swing high right here, and then also our 15-minute swing low. Okay, so you can see, just by having this mechanical trade plan, you have so much structure in your analysis, in your thought process, right? So based on this, we saw that, okay, that's the first step, identify 15-minute structure and trend. Cool. Now price is starting to pull back, right? Price starting to pull back. That is where do we want price to pull back to? Actually, we want price to pull back to our discount and premium pricing. Okay, so based on this, I'll probably mark up my premium discount from this high to this low right here, just waiting for price to pull back to the premium discount. Dun, dun, dun. There we go. Okay, there we go. The minute price pull back into the premium discount, just like this, the minute it crossed above the equilibrium right here, this is where I can just check the second box. Third step is to determine where is the available liquidity. Once again, right here, look towards the left hand side right here. What do we have? Price goes down, pulls back, goes down, pulls back, and then goes down even further, right? So there is swing highs right here, so we know that there is available liquidity above this high itself. Okay, so based on this, we can also identify that there is also our supply zone right here, and then there is also our extreme supply zone, same as the previous scenario that we have right here. And as usual, we are not going to be expecting this near zone to hold, because this zone right here is just for price to smash right through it to grab available liquidity above these highs before price could potentially come into this extreme zone, and then we got the real move to the downside itself. Okay, so let me just remove that once again. Okay, so that is where we can check off the third box. Now, the fourth step is to enter at a 15-minute high probability zone that swept liquidity, right? So if we look towards the left-hand side, did this zone swap liquidity? Yes, it did. Because what happens is that price goes down, pulls back, goes down, pulls back, goes down. Available liquidity is being built up above these highs right here. Forgive my ugly drawing, but you get the point. Before price comes up there, sweep all the available liquidity above these highs right here before we got a sharp down move, that sharp V-shaped reaction, which we love. So, based on this, we know that this is our 15-minute high probability zone that swept liquidity, right? It's a high probability zone, baby. So it's time to go, all right? It's time to go. That is where we want to place our entry limit order, right? Place our sell limit order at the edge of the zone itself, place our stop loss above this zone, and then place our TP at 3R, right? Potentially 3R right here. Or in this case, I'll probably just target like right here at this last swing low right here, because we are expecting price to take out this swing low as well. Okay, now you can see this is one of those scenarios where the stop loss could be a little bit wide, right? So this is where you can really jump down to the 5-minute and refine the zone, right? So in this case, I'll probably just refine the zone to like this particular candlestick like this, and I'll place it at the edge of the zone itself, right? So how I usually refine the zone is that I just refine it from the entire range to that one single pivot candle that led to that down move. Okay, so based on this, let's see what happens next. You can see right here, price come up there, tap us into the zone right here, tap us into the trade right here, And let's just see what price does. Eventually price comes down, collapsing, and boom, smash our TP. As simple as that, guys. And in this case, this is a 1:4 trade, right? So yeah, based on this, you can see we are not utilizing multiple time frames like we usually do. We are just using one time frame. And just having this simple 5-step process, it keeps things simple, keep things mechanical, and most importantly, profitable. Okay, so as usual, once again, after I got out of this trade right here, just gonna clean up the drawings, reevaluate the entire situation. And right now we saw that there was another break of structure to the downside, right? So as you guys know, right here, we are just trading with the trend, right? We are not looking for counter trend trade setups. We are not trying to buy in a downtrend. We are just trading with the trend itself, okay? So once again, just restart this entire process. That is why these check boxes are so useful, because once you are done, you can just uncheck them and then you can just redo the entire process. Okay, so you can see right here, this one was a very sharp one. So you can see this one was a very, very fast one. If you are too slow, you have missed it. All right, so let's just go back a little bit right here and see what exactly happened. Okay, so based on this, price goes down, pulls back, goes down, pulls back, goes down, pulls back. So based on this, we saw that there was like a little downward trend line, right? And we know that when it's a trend line just like this, that it's just available liquidity being built up. Because what happens is that all retail traders, they are trading the trend line, they are selling right here, placing a stop loss above this high, selling here, placing a stop loss above this high. So there's a lot of available liquidity above all these highs right here. And then based on this, we saw that this is our extreme supply zone. Once again, that swept liquidity on the left hand side. And then this was that available liquidity, right? So based on this, we are waiting for price to pull back to the premium discount right there. And this is that particular zone that we want to enter on. And bam, you can see, boom. This is why you gotta be quick, you gotta be fast, you gotta think on your feet, right? The minute you got out of the trade, just clean up everything and reevaluate the entire situation, right? Don't sit there and celebrate. No, you gotta keep going, bro. You gotta make as much money as possible. So at this point of time, boom, you could have easily been tapped into this trade right here. Sell limit order at the edge of the zone itself, TP3R right here, boom. Another day, another W, another day, another trade, another trade, another W. Within 30 minutes itself, you just hit 3R just like this. What you do before you start trading is actually very important. It's as important as what you do when you are trading. So my pre-market routine consists of me doing 3 things. And this pre-market routine, I'll do it like right before I trade, or rather 1 to 2 hours before I trade. So I'm usually trading like the London session, so it's probably about 1 to 2 p.m. Singapore time, right? So that is when I'm going to be doing my pre-market routine. So 3 things that I do is, firstly, I review my trading plan. Remember, trading is a very boring sort of thing, right? It's like you have to go through your mechanical rules and you have just to stick with them. Like, that is just the truth of profitable trading. You just need to create mechanical rules that works and then stick to them, right? So that you don't actually, regret the trades that you never take and become a hindsight trader. Second thing is that I will actually go look at Forex Factory for any upcoming news so that I can, prepare myself for it. And most likely I will stay out from completely trading news. The whole main reason why I don't like trading news at all is because it is extremely volatile and is prone to news manipulation, right? It is literally the best opportunity for smart money to manipulate your trades. So the last thing that I would do is actually analyze and mark up my charts. Like I said, trading preparation is key, right? You need to prepare yourself. And how you prepare yourself on the charts is by actually going through the charts, going through your watch list, analyzing the charts, mark up your market structure, identify your overall trend direction, look at the order flow of the market and looking for any available liquidity for the smart money and stuff. And that is what we are going to do right now. So I'm just going to quickly walk you guys through my entire thought process when I'm analyzing the charts. So as you can see, first thing is that we identify the overall trend direction on a higher time frame, whether it's bullish or bearish, and whether price is in a push phase or the pullback phase, right? So over here on the higher time frames, we saw that price was in a bearish order flow, right? Price is just going down here. And the thing is, this overall trend is like a bearish trend, right? It's bearish trend, price is going down, and we should be potentially looking for any sort of sell position. Unless price to get a very strong price get to a very strong demand zone or the point of interest. So the overall trend direction is bearish, and then we see I mark up my market structure right here, break of structure here, break of structure here. Like I said, I'm just gonna speed run this stuff. Alright, then price must be at like a 4-hour point of interest, and I can see price finally get down to this 4-hour point of interest that I've drawn right here, this demand zone and this order block right here, and take that, and then I will potentially be identifying any sort of inducements being formed, any sort of traps. And you can see there's like a trap right here, right? There's some sort of inducement being formed at this area here. Yeah, this is definitely an inducement where price actually come into this supply zone and it never taps into it, and instead it just touches it and it starts creating that double, that double top, right? You can see double top being formed right here, inducement being formed. There's available liquidity above these highs right there. So there was inducements, and then could potentially be a liquidity sweep in price, where price comes into this supply zone and sweep the liquidity above these highs, and then right, and we want to see the V-shaped reaction to confirm that this is a liquidity sweep. So I want to see price actually sharply move down, and that confirms to us that that is the liquidity sweep. And when that happens, I'm looking for that market shift, a shift in structure that tells us that this overall uptrend, this little retracement is about to be done, and right now price is about to go down right now, right? So that will be your market shift, and then I will enter after price actually get to like some sort of like a flip zone or something. So it like create the market shift right here, right? So that is what it will look like. Let me just show you. So price will actually potentially create the market shift, right? Let's say this is the high low, and then come down here, create that market shift, and then it will actually come back up to retrace to the order block that created the market shift, or some sort of flip zone that we have right here, and then show momentum, and that is when you can enter for that sell, and you place a stop loss above these highs and take profit at the next swing high, which could potentially be right here, somewhere right around here. And that will be basically my entire checklist all being checked. And before I even enter for the trade, I will actually quickly go through my entry criteria, right? So I'll go down to the 15-minute time frame, and then once I see that opportunity, right, I'll actually go to see whether that was pull inducement being formed, there was liquidity sweep, and then whether supply has flip to demand or demand has flipped to supply, and whether there's a shift in structural and strong momentum at a flip zone or order block. And yeah, that is basically how I just went through the entire strategy within like 3 minutes, and I'm pretty sure this 3 minutes is more valuable than any bullshit trading video that you see out there. So right now we are actually journaling our trades. So like I said just now, there's a pre-market routine, and then there's a trading routine where you actually analyze the charts, and then the post-market routine is basically what you are doing after you're done trading. And believe it when I say that time off the charts, it's often more important than time you spend on the charts, especially if you get to a point where you have been trading for quite some time now. Then you do need to take time off the charts to gain more clarity in your mind and stuff. So yeah, like I said, journaling is like a very essential part of my entire process, right? So basically what it does is that it helps me to be very aware of the mistakes that I've been committing, and basically the lessons that I need to learn in order to grow as a trader, right? And I always tell my students, or rather the 1% Club members, that the most valuable information about your trading, it is your trading, right? So if you don't journal, you are gambling, because you are just aimlessly charting every single week. And most traders, they don't want to journal, because we humans, we want to avoid pain, right? And we want to avoid the cold hard reality that we are still not profitable, we are still losing, and that is like, it's just painful to actually like confront the losses and stuff and actually learn from them, right? But actually the thing about trading is that like reviewing your trades, that is where the true growth lies. So you have to review your trades in order to take your trading to the next level and stuff. So right now, just in the works of actually going through the trade setups, the wins, the losses, if I lose a trade, and then I'll just put down like entry screenshot right there, entry screenshot, and then also like the reason why I entered for the trade, and my thought process when I'm entering, and then basically an exit screenshot of the screenshot that I took after I got out of the trade, and then why I lost. And usually it could be due to some stupid mistake, or it's like a successful trade because like I followed my plan, and trading is like a probability game, and I still end up losing. Then in that case, even though it was a loss, it was a good loss, right? And to me, I will count that as a successful trade in my playbook, because I followed my plan, I executed my plan, and the market is just random. And it just so happens that I fell on the wrong side of the market, right? It is what it is. We move on to the next trade, and then we're gonna go on to the next day and just continue trading, just pretend like everything's all good. And if I win, what I do is that instead of getting complacent and celebrating my wins, right, like this was the 1:4
5 trade on Euro short, right? Very nice 1:5 trade, made about, I forgot how much I made, 5k or 7k. But anyways, this trade came and it was a very beautiful trade. We got a very nice sniper entry after the liquidity sweep. You know, everything was good, happy days. And yeah, what I do after the win is that I just think about how do I replicate this win again, so that I could maybe repeat the same trade when I see a very similar setup, or what I could have done better, right? Because I always think that whenever I win, there is always that one tiny thing or that 1% that I can improve on. Yeah, so I just think about how I can do this better, and that really allows me to transcend as a trader, right? Allows me to really grow a lot as a trader. Yeah, so that's the importance of journaling, and this is usually what I do after I am done trading for the day, right? So bear in mind, this is the essential, if not, this is like the crucial part of your entire trading journey. And yeah, like I said, this is where your true growth lies. So go out there and journal, even though you do. So go out there and journal, especially if you do not feel like doing it, because that is where the true growth lies, and that is where you are able to improve your edge as a trader and actually, you know, get better and make more money, and eventually you will get to the point where you are consistently profitable. And you will only get to that point once you have built enough self-awareness of what are your drawbacks as a trader, what are your weaknesses, and formulate a plan to actually overcome this weakness. Right? Yeah.
So in addition to journaling and actually reviewing my trades after I'm done journaling, right, what I also do is that I do this monthly and quarterly and annually review, right, which means I review my trading performance every quarterly. So right now Q1 just ended, right? So Q1 was January to March. It just ended recently, and I recently did like basically like an entire quarterly review where I actually looked through, you know, all the monthly reviews for January, February and March, and then I compiled all of them into the quarterly review. This is the Q1 review right there. You can see our net profit was about plus 10.7 R, not too crazy, right? Not too crazy, but it was just like a rough start to the year. So yeah, 10.7 R is not so bad. And then what drives you to succeed as a trader for me is my parents and Impact, you know, the 1% club. Because I believe that the more I improve as a trader, the more our students improve, and the faster everybody get results. So I basically write down things like, what have I done this quarter to actually improve my trading performance? What are the major lessons that I have learned? Things like capital preservation, using trade management, setting realistic take profits, avoid low probability setups. You can see right here. Major lessons that I've learned in Jan. So I basically do this like trading performance reviews, because like I said, I want to be a professional here, which means that when I am trading, I want to make sure that I can actually, you know, get better as a trader. And how are you going to get better if you don't really understand your trading performance, right? How are you going to even get better if you don't understand, you know, what are the things that you can do to improve on? What are your strengths? What are your weaknesses? You know, it could be what trading strategy that you are using. Maybe you need to switch to intraday or swing trading, which could be more suitable for you. So it's really all about like thinking about how you can optimize your trading, or rather your entire performance, like trading performance, or rather for me, I optimize my entire life to make sure that I'm like the best trader in the world, right? To make sure that I reach my fullest potential as a trader. And it comes down to things like the sleep quality, you know, whether I exercise, whether I have a clean diet so that I can think with a clearer mind, so I don't have brain fog and all this stuff. Yeah, so all of these things are things that I really do to like, you know, just optimize every single tiny part of my life so that I can succeed. And I believe that is what it takes to win. So the question becomes, do you have what it takes to win? Right? Because like I said, trading is a zero-sum game, right? You can either win or you can lose. And chances are you do not want to be the losing one. You want to be a winner, right? We all want to be winners. We all want to, you know, stay in nice penthouses with a beautiful view and make money, get jacked, get women, get status. You know, we all want that stuff. So do you have what it takes to win? Because what it takes to win is to actually reviewing your trading performance and continuously optimize and your trading performance. It could be things like refining your entries and exits to make it even tighter so they can have that higher risk to drop ratio, higher win rate. So you go onto the community, you see our students sharing their certificate, their funded certificate. They are getting their first payout, second payout. They're making thousands of dollars. And you sit there wondering, what the hell are these certificates? Why are they getting so much money? And it's all because of prop firm. Alright, hear me out. Alright, I'm just gonna explain everything from the start so that you as a beginner to prop firms will understand how the entire process is gonna be like. First of all, you need to understand that in trading, you need money in order to make money. I know this might sound obvious right now, but most traders, they don't really understand this. They still think that it just comes out from thin air and just like fall down from the sky magically. No, you need money in order to make money. Which means that if you are trading with a $100 account, how the hell are you expecting yourself to make $5,000 tomorrow? It doesn't work that way. Or if you are trading with $5,000, how can you expect yourself to make $50,000 tomorrow? Once again, doesn't make sense. You need a large amount of trading capital in order to get a large amount of profits if you are trying to follow the risk management rules. So most traders, they suffer this tragedy called undercapitalization. And it basically means that you lack sufficient capital. That's what it means, right? Very simple. Most retail traders enter the market undercapitalized, which means that they don't have enough trading capital to trade with in order to make a living from trading. An example, today you venture into trading and you have quit your job. You want to pursue this full time. Now, remember, you still got your bills to pay, you still need to pay your mortgage, you still need to put food on the table, right? So if you are trying to make a living from trading, you should be at least earning $5,000 to $10,000 per month, at least, if you want to make a living from trading. And you cannot make $5,000 or $10,000 per month if you are trading with a $100 account. If you are trading with a $1,000 account, doesn't make sense whatsoever if we are trying to follow our risk management rules, which is risking no more than 1% per trade. And right now you are trading a $100 account. That means if you risk 1%, that is what? $1. And you are potentially risking $1 to make back $3, $5. How are you going to make a living when you are trading with such a small amount of money? Doesn't make sense whatsoever, right? That is why I say that most of you guys are undercapitalized. Most of you guys are broke, right? That's the cold hard truth. If you are broke, then you are expecting yourself to generate consistent income as a full-time trader. It's not gonna work out. As a result, they end up taking on excessive risk on each trade in order to get big returns, right? Next thing you know, you are trying to flip this $100 to $1,000 because you need to pay your mortgage. And as a result, you put on like a standard lot size, right? You put on a trade that is way too big for your account to handle. All because you are focused on flipping the account, you're trying to make as much money as possible. Now, if you're able to trade with a larger capital, it'll be so much easier for you to follow your risk management rules. And as a result, trade with more peace of mind, right? Just think about it. If you are trading with a $100 account and you are risking 1% per trade, that is $1. If you are trading with a $100,000 account and you are risking 1% per trade, that is $1,000, which means you will potentially make $2,000, $3,000, $4,000, $10,000 on a single trade. And you can see the risk management rules is the same. We are still risking 1%. It's just the difference in the account size. You are trading with a larger capital. As a result, you are able to make a larger amount of profit. It also allows you to endure losing streaks and give you a higher chance of surviving long enough so you can actually experience those winning streaks, right? When you are going through a slump, a bad week, guess what? You're gonna take a bunch of losses. And if you are trading with like a $100 account and you are over risking, you're over leveraging, it's gonna take you like a few trades and then you're gonna blow the account. Right? So having a larger capital allows you to really have more room to play with. And as traders, like I said, we want to play the long game, right? We want to focus on capital preservation. As a result, then we can finally make profits. Yeah, so having a large amount of capital gives you more room to breathe and it gives you more safety net, so to speak. So a proprietary trading firm is basically a company that provides capital to its traders in exchange for a percentage of the profits that they generate with the company. Example, if a prop firm gives you $100,000 to trade with and they ask for a 60-40 split, that means they could potentially take 40% of the profits that you have made and then you get to keep the remaining 60%. That's what it means. So examples of prop firms are Funding Pips, Alpha Capital Group, FundNext, and FTMO. And once again, there's a lot of prop firms out there. There is potentially like 50 more or something. 50 more prop firms out there to trade with, right? But these ones right here are the ones that we personally recommend, the ones that our students most commonly use, right? FTMO, Fundanex, Alpha Capital, these three actually, right? So if you have to choose one, if you are asking me for a recommendation, I would say go with FTMO, because this is always the most legit, is the most well-established, and is the most trustable and safe one that will not go wrong. Yeah, so FTMO. So the rise of prop firms lately have allowed retail traders to gain access to a large amount of trading capital from $10,000 to over $400,000. Yes, you heard that right. You could potentially trade $500,000, or they can even scale it up to $1 million in trading capital. Imagine trading with $1 million, right? If you risk 1%, that is what? How much is that? Is that like 10,000? Yeah, that's like $10,000 per trade. Yeah. So yeah, really, by having these prop firms, it's kind of like a blessing in disguise, in a sense of the fact that, yes, it's providing all these retail traders with a large amount of trading capital. But the thing is, these prop firms, if you want to join them, it's not easy. I'm going to explain more about the rules later on. Right, obviously the prop firms will not give you the money immediately, because you have to prove your worth by showing them you actually know what you are doing before they will entrust you with a large sum of capital. Right, they are not stupid. They are also investors. Right, they also want to make money. So that is why when you join them, right, they expect you to be somewhat profitable already, so that you can actually generate profit and then they get a percentage of the profit split. Therefore, you will be put onto a test before you can officially join the program and receive funding, right? You have to go through a test, not just one time, but 2 times. Once again, I'll discuss more about this later. Right, for now, let's just quickly look at some pros and cons of prop firm, right? So, the pros is obviously more capital equal more profits, right? Like I said, trading with a $100 account, compare that to trading with a $100,000 account. You are definitely going to make the more amount of profits because you are risking more amount of money. And there is limited downside because for prop firms, right, when you lose money, you are not liable or accountable to the losses. That means that you will not lose $5,000 or $10,000 on your trading capital. No, it's their capital that you are losing. And it doesn't really affect you whatsoever. They are not going to come after your ass and sue you whatsoever. No, they are liable for all the losses, right? So that gives you a limited downside. The only risk that you have is the upfront fee, right? The upfront fee, which I'm going to talk about later. Lastly, access to useful resources like courses, journal, and tracker, right? You are able to get access to cutting-edge technology where you are able to track all your trading data, all the trades that you have taken in one place. Yeah, so this is very useful as well. Now, the cons is obviously the upfront fee, right? So when you join the prop firm, right, actually before you officially join them, you have to pass a test. In order for you to even qualify for the test, you will be required to pay a small fee, right? So example, a small fee could be, okay, if I want to get $100,000 funding, I need to pay about $1,000, okay? That's just for me to enter into the test, not even for me to pass the test and receive the 100K. No, just for me to enter in the test. So if I fail the test, I will lose the $1,000 that I gave them. If I pass the test, they will refund me the $1,000. So technically it's kind of risk-free, right? But obviously there is always the risk that you are going to lose the fee if you are a bad trader or you are not consistently profitable and you just end up breaking the rules. Once again, we'll discuss more about this later. And there's an increased pressure from hitting the profit target. Yep, you heard that right. There is a specific percentage, or rather a specific target that you need to hit every single month. Lack of stability, since you can lose your funding if you break their rules, right? At any point of time, they have the power to actually remove you from the program and take away your funding, right? If you break their rules, you lose too much money, you underperform, they will just take you out, right? So there's lack of stability right there. Okay, if not, let's go and learn more about the rules of prop firms and how it actually works. And we are going to look at FTMO because that's really the most trusted prop firm out there right now. Okay, so you can just search Google FTMO, just search online and then you can just find the first option. This is it, right? So yeah, once again, it has been established for over 10 years now, right? Almost 10 years right now. So yeah, master of trading skill, blah, blah, blah. Okay, cool. Let's scroll down and let me show you guys what we got right here. These are the trading objective that you need to meet. First of all, you can see, you can choose the balance, right? How much funding do you want? Do you want $10,000 in funding, or 25k, or 50k, or 100k, or 200k? You can choose them, right? Obviously, you can see the refundable fee that I'm talking about, the upfront fee that you have to pay them in order for you to qualify for the challenge is gonna increase the higher you go, right? So you can see 10,000 is about 89 euros, 200,000 it's 1,080 euros, 100,000 is about 540 euros, right? So yeah, I can see there's different price point for different funding. Obviously 200k, it requires at least 1,000 bucks. Is quite reasonable, honestly. Yeah, but let's look at this. By the way, you can change the currency right here as well, right? Let's just stick to USD. Okay, cool. So let's say today you decide to get funded with 100k because you want to be a 6-figure funded trader. All right. So in that case, first thing you need to do is to go and buy the challenge, right? So you go here, start FTMO challenge, and bam, you'll be directed to like some sort of checkout link where you have to check out and pay them 540 euros. Once again, this is not so that you can get the 100k. No, this is just for you to qualify for the challenge. If you pass step 1 and you also pass step 2 and then you become an FTMO trader, that is when you finally get access to this 100k. Okay, so let's go through step by step. Let's look at step 1 first. Okay, so after you pay them the 540 euros, you will be given MetaTrader 4 login details, or MetaTrader 5, right? Login details, you type in your password, all that stuff, and you will be required to actually connect your MetaTrader 4 to their broker. Once that is done, that is when you can start going, right? Start attempting the challenge, right? So that is the first thing that you need to do, is to attempt the FTMO challenge, right? So during this challenge phase, once again, the trading period is unlimited, right? Which means you have as much time as you need to reach your profit target, and the profit target is basically this one right here. So in order for you to move on to the next phase, you need to make $10,000. So if you look at this, this is 10% of 100k, right? So if you are thinking in terms of percentage, your goal is to make 10%. And once again, they didn't limit the amount of time, right? They give you that breathing room. Last time, we didn't have the breathing room. Last time, if I was going to get funded, right, I needed to make $10,000 within 30 days, right? So nowadays, it's like much more easier, right? But now, yeah, unlimited. Like I said, you can take as much time as you need to reach your profit target. Okay, cool. Okay, next is the minimum trading days, right? 4 days. Right, you must trade for at least 4 days during the current duration cycle. At least one position must be open on each of these days. A trading day is defined as a day when at least one trade is executed. If a trade is held over multiple days, only the day when the trade was executed is considered to be trading day. I believe this is very self-explanatory. You basically just need to take a trade for 4 days, and it doesn't have to be in a row. It can be like any 4 days. Next is maximum daily loss, right? So this one is, there's a little bit of formula behind it, right? So your maximum daily loss is 5%, right? You can see 5,000, that is about 5% of your initial account balance. Yeah, so this is the formula. Results of your closed position of the day plus the result of open position. This is very important. A lot of traders neglect this. Right, now here's an example right here. Initial account balance 200k, max daily loss limit is $10,000. If you happen to lose $8,000 in your closed trades, your account must not decline more than $2,000 this day. It must also not go negative $2,000 in your open floating losses. And this includes commissions and swap. Now, you can see, very important, it doesn't just include the closed trades. Right, so in this case right here on the 100k account, let's say you lost $4,000 today, and right now you still got 2 trades open right now. Those 2 trades, it cannot go into a drawdown of more than $1,000, right? That means it cannot go into negative 1,001, 1,002. Once that happens, bam, you're out. You're out of the challenge, and you lose your refundable fee, and you fail this challenge, and yeah, you are out. Yeah, so that is a rule, and they also mentioned that, okay, if you profit $5,000 in 1 day, then you can afford to lose 15k. So you can see, the profit, whatever you have earned, it gives you the extra buffer to play with. Yeah, but Once again, just to remind you, max daily loss counts your open trades as well. By the way, this one resets at midnight, yeah, Central Eastern Time. Yeah, so take note of this. Okay, so that's the maximum daily loss rule. That is why inside the capital management module, I ask you guys to risk 0.5%, right? When you risk 0.5%, it's much more easier for you to actually pass this challenge compared to risking 1% because you have more room to play with, you have more buffer. Okay, next rule is maximum loss. Bear in mind, this is maximum daily loss, right? So this is the maximum amount of money that you can lose on particular day within 24 hours itself, before the midnight Central Eastern Time. Okay, next is maximum loss. Now, as for your maximum loss, this is the total amount of money you can afford to lose during the entire duration of your challenge. Okay, basically your account balance, right? It cannot go below $90,000. That's it, right? That's the bare minimum, right? It cannot go below $90,000. Once you go below $90,000, you are out of the challenge. Yeah, so that's for maximum loss, right? Once again, this one very self-explanatory. Yeah, the equity must not at any movement during the account duration decline below 90% of the initial account balance. Right, you can see, yeah, 100K, the lowest possible equity is 90K, right? If you go below 90K, no go. And once again, this is also including the open position as well. Same thing as the max daily loss. It takes into account the drawdown as well, right? How you calculate this is the same as the max daily loss. It's just that this one is not limited to 1 day, but the entire duration of the testing period. Yeah, once again, it includes the commissions and swap. And yeah, next is the profit target, like I mentioned, is 10%, right? So you need to achieve 10% in the challenge phase, right? In order for you to move on to the next phase. Yeah, so you must make $10,000 in profit right here. Okay, after you complete the first test, let's say magically, miraculously, after you have followed our mechanical trading plan, you have used our exact funding blueprint, right, to get funded. That is when you pass this first phase, you made $10,000 and you move on to the next phase. Before I move on, I just want to point out the fact that for the profit target, right, different prop firm have different profit target. In this case, FTMO requires you to make 10%. But right, when you go on to the funded next, another prop firm, and you scroll down, you can see that this one, the profit target is 8%. That's the difference. You can see different prop firms have different profit target. FTMO require you to make $10,000, while Fundnext required you to make $8,000, 8%, right? And you can see the minimum trading days is also different. Once again, different prop firms have different rules, all right? Take note of that. Okay, if not, just get back to this. So yeah, phase one, you have made $10,000. Congratulations. But that's not the end. That's only the beginning. You move on to the next phase, step 2. This is the verification phase. Once again, if you look at the rules, it's the exact same rules as step 1. And it's just that now they make your life easier by requiring you to hit the profit target of 5%, right? So instead of 10%, you just need to repeat the same thing and just hit the profit target of 5%, right? And once you're able to hit that profit target of 5%, that is when you finally pass phase 1, phase 2, and you move on to get funded. And that is when you will gain access to the $100,000 in trading capital. Cool, congrats. Now you're an FTMO trader. Your job right now is to maintain consistency, is to maintain that funding and not lose your account. Because bear in mind, there is still certain rules, right? There is still the $5,000 max daily loss. There is still the $10,000 maximum loss. If at any point of time you break either of this rule right here, you are still going to lose your funding. Once you have made it past these two phases, right? Your refundable fee, this fee that you have paid them at the start, it will be refunded to you. Yeah, you heard that right. So you pretty much got this entire challenge for free. Now, for the mindset part, I just like to split into two things, right? Confidence and discipline. You need the confidence to execute your trades without hesitation, reservation, or fear. That's very important. And how do you gain that confidence? It only comes from competence. When you have a proven edge that actually works, you have back tested it, you have forward tested it, you have tried it on your live account, then we know that it works. Yeah, so once again, actually go through this inside the systems and processes module. We talk about how to backtest, forward test, everything. Yeah, so that is how you gain confidence. Like I said, you will not get confidence by shouting affirmations in the mirror, or even by reading the Alchemy Yourself 2.0, right? You will not get confidence by reading, oh, I'm a professional trader, oh, I can make money, trading is easy. It doesn't work that way. You need to put in the work, and that's how you really build confidence. Next is discipline. As for discipline, I like to split it into 3 ways. Discipline is important, not just when you are trading, but before you trade, during your trade, and after you trade. So before you trade, you need the discipline to go through your trading plan, right? Go through rule by rule, and then you also need the discipline to actually create the trading plan in the first place, or even decide which trading session to trade and stick to it. And then when you are trading, you need the discipline, or rather the patience, to wait for price to get to your point of interest, your supply and demand zone, wait for price to sweep liquidity, right? To tell you some sort of signs that the smart money, the financial institutions have entered into the market. Very important. So yeah, and after you trade, the discipline to journal your trades, right? Journal your trade, review and record your trading data, find out what works, what doesn't work. So these are the 4 main things, right? Like I said, you need to have every one of these. If you don't have any one of these, don't try to get funded. All right, don't try. It's just you wasting your refundable fee, and it's not cheap, right? You know, let's be honest, $600 is not cheap. For me, I failed like 4 funded accounts in my first 2 years before I finally passed one. Yeah, and then once I passed that one, I lost it like within 1 month. Yeah, so funding challenges, it's not easy, right? By no shape or form is it easy. It's very difficult, honestly. Yeah, but like I said, if you follow this blueprint, it will work. Okay, next is tips and tricks to achieve funding. Now, here's just some tips. Like I said, purchase a funding account with a refundable fee that you can afford to lose. So, like I said, man, if you cannot afford to lose $600, maybe try to get a 10K account, or even a 20K or a 50K account, right? Which costs like, I don't know, a few hundred or less than $100. Yeah. And only take high probability setups and always look for confirmation. So let's say price is going up like this. And then, first things first, identify what phase of the market is in, right? Is it in a pullback phase or is it in a continuation phase? So after a break of structure, we know that price will start pulling back. We don't know where exactly, but we know it's going to happen soon. And what I like to do is just look towards the left side of the chart, see if there's any unmitigated supply or demand zone. Okay, once we see price entering into the zone, anticipate, not really anticipate, but kind of like know that price could potentially pull back soon. Okay, so, okay, now we know that price is in a pullback phase. Right? So like I said, it's very simple. It's either in the continuation phase or the pullback phase, or it's just like a consolidation where price is going sideways. Right? There is no alternative. It can't fly, it can't do anything else. It's just up, down, sideways. That's it. Right? Identify the trend direction, mark up your market structure, do a top-down analysis, mark up your point of interest. The next step is to just wait for price to get to your point of interest. Right? Depending on what type of trader you are. Are you a scalper? If you're a scalper, then in that case, you will be analyzing the charts on the 4-hour, the 4-hour and the 1 hour, and you will be marking out your point of interest on the 15-minute or even the 5-minute. And then you wait for price to get to your 5-minute or 15-minute point of interest. And then go down to 1 minute to execute your trades. Basically, once you mark out your point of interest, you just wait for price to get to your point of interest. That's my plan, right? So for me, I'm mixed between intraday and swing trading, right? So I'll just mark out my point of interest on the 4-hour, the daily, and even the 1 hour time frame. And then I'll set alerts, right? You know, TradingView got a function to actually set alerts at what price point you want price to go to, and then you will trigger the alert, right? And then it will send you a notification in SMS or email. Yeah. So set alert at a point of interest and do nothing. Do nothing. Go about your day. Go gym, go interact with your family. You must understand that why do you start trading in the first place? It's for freedom. You are not here to stare at the charts all the day. I mean, you can do that, but I believe Sanjeev will know that it's disastrous to do that. You make money in the Asian session, you give back the profits they will make in the London session, and then New York session, you lose even more money. So it's about finding the sweet spot, right? So like I said, I always preach that just focus on one trading session, be it London, New York, or Asian. Yeah, so once price gets to the point of interest, TradingView send me an alert. Okay, cool, Brett, go and analyze the charts. All right, cool. It's usually around London session, I'll get the alert. Right? If it doesn't happen, if I don't see my trading opportunity during the London session, I don't trade. Yeah, I don't trade. What if, you know, price doesn't reach your point of interest during the London session and it reaches during your New York session? Cool, you can take the trade. But for me personally, I don't do it because I like to stick to my plan. And another thing is, like I said, you just need data. If you have the data to actually back up that, okay, London session and New York session both works fine for you, then you can do that. Like, I can say, okay, yeah, just stick the trading in London session, but doesn't make sense for a swing trader. You know, you're a swing trader, depending on what time of the day, maybe the price goes in the point of interest in the Asian session. It'll be kind of stupid to not take the trade as well. If it works for you, right, Yeah, like you are taking a swing trading approach, price doesn't really go to your point of interest in the London session, even though your plan says that you should trade the London session, I will advise you, why not trade both or do what you do. Basically, whenever price gets to your point of interest, you enter the trade. Do that for 1 month. Build the data. Right? Once you got the data to actually back up that, okay, that actually works, then yeah, stick to it by all means. Yeah, because the thing is, everybody's trading approach is different, right? There's no one size fits all when it comes to trading. Once price gets to your point of interest, your alert sets off, what next? You look for your entry model on the lower time frames, be it the 15-minute or the 5-minute or the 1-minute, whatever time frame that you're entering the trade on. Look for your entry model. For me, this is where I get my confirmation. Now, remember, once price gets to my point of interest, I don't want to enter yet, because there is a chance that it is not a high probability point of interest, and there's a high chance that it might fail. Price will just blast right through it. So that is when you guys learn about risk entry and confirmation entry. Risk entry is you place your limit or order at the point of interest. Once price steps into that, you are inside the trade. Confirmation entry is you wait for price to get to the point of interest, and then you still wait for your entry model to form before you actually get in for the trade. Confirmation entry will always give you a much higher win rate, because you get the extra confirmation. Yeah, so as for the confirmation, once price gets to a point of interest, you look for an entry model. There is 3 confirmation I'm looking for. First things first, market shift. Market shift is goddamn important. I can't emphasize how important it is, because it shows you that there is a shift in order flow of the market. Whether price is going from bullish to bearish, or whether demand has stepped into the market, or supply is still overpowering the market. Market shift. Second thing, liquidity. I need to see some sort of liquidity sweep. And when does liquidity sweep usually happens? Either the London Q zone or the New York Q zone, either of these Q zones. Yeah, so that is when you are able to find the most amount of trading opportunity, especially if you're scalping. Yeah, so those are the 2 main confirmation. For now, it's just liquidity and market shift. And as for the entry model, I believe you guys have seen the 6 entry model, right? That's like the flip zone, the flip plus sweep zone, yeah, all that stuff. Yeah, I'm not going to bore you guys with the details. Okay, so yeah, that is what I mean when I say high probability setup. High probability setup is basically a setup that aligns with your trading plan. And for me, I sometimes like to add the extra criteria where I have to look for confirmation. Next is fully accept and embrace the loss or risk, including the challenge fee. What does it mean to fully accept and embrace the loss? I believe Sanjeev talked about that a lot just now. Yeah, you gotta fully accept it. No, it's not just about knowing that losses are good. It's about really accepting the fact that you will suffer losses. It is inevitable. Even professional traders, hedge funds, they still go through losing streaks. They have down months, they have down quarter. It is completely normal. It's really what you do during this losing streak. Because the hard part about losing is that when you lose, you're not just losing your own capital. You are losing a little bit of your confidence to execute the trade. That is why after you lose a bunch of trades, the next trade you see that lines up with your trading plan, you don't take it because you feel like this fear, this hesitation, The solution is very simple. Every single trade idea is not related. If you flip a coin, you will never ever know whether it's going to land on heads or tails, right? You never ever know the sequence of the trade outcome, whether the next one is going to be a win or next one is going to be a loss. So what you can do is to just execute your plan. And if you have back tested it, you have like a solid win rate, right? Like 70, maybe not 7%, but like 30% to like 70% or 80%, that's good enough, right? You know that you will be profitable in the long run. So that is where you really fully accept and embrace the loss and the risk, because you know that every single loss takes you much closer to a win. Next is journal every single trade, both loss and win. Yeah, just journal. Honestly, just journal. Like I said, it's really building the data. And just think about how good it will be 3 years down the road. You look back on your trading journal and you see like the stupid beginner mistakes that you committed 3 years ago. It's a gorgeous feeling, right? Sometimes when I look back at my trading journal, I see notes from like 2021, 2020, and it's me like over trading, revenge trading, and emotion trading, and all the stupid beginner mistakes. And I just look back and just appreciate how far I've came. Because like right now, I know that I don't feel these emotions anymore. And that's the thing about emotions. You start to get numb to them when you have been trading for so long. You start to get desensitized to the numbers, the profits, and the loss that you see on the screen. Okay, cool. If not, we can get back to the funded strategy. I've drawn a little diagram right here. Now, what this diagram shows is that, okay, right now this is where it starts, right? If you join a prop firm, you want to get funded with 100K, 200K, whatever it is. First phase is usually the
funding phase. Yeah, funding phase. And then next one is the verification phase or something. Yeah, but anyways, first phase, you are required to reach a profit target of 10%, right? Which means you need to make 10%. And right now there is an unlimited amount of time for you guys to reach that profit target. Back then, we didn't have that privilege. We have to reach 10% in 30 days. Yeah, that was at quite a few years ago. Yeah, so 10% unlimited time, right? The key point is unlimited time. That means you don't need to rush, right? Be very patient, wait for price to reach your point of interest, execute. Okay, so this is the strategy. In order to reach the 10%, like I said, it's not easy, right? It's very difficult to actually reach 10%. But like what I said in self-transcendence, your paradigm literally dictates everything, right? If you think it is difficult, it's going to be difficult. If you think that trading is a scam, you're going to self-sabotage yourself. If you think that trading is easy, you'll put in the effort to actually do it and learn and master the craft. So it's all about the paradigm. Like I always say, your belief leads to your actions, and your actions lead to your reality. Yeah, so paradigm very important. But most important is really the strategy. So for this funded strategy that you will learn, it doesn't require you to have a high win rate. You don't need to have like a 80% win rate or 90% win rate. You just need like a 30 to 40% win rate, right? Which means out of 10 trades in a row, you're winning about 3 to 4 trades. You don't need high win rate. So it's very doable for each and every one of us here. So the minimum of R multiple on each trade is 1:3. I would actually recommend you guys to strive for at least 1:3. But aim for 1:5. Always aim for 1:5 risk to reward. Never settle for 1:3. But this is really the bare minimum, right? Like if you have no choice, 1:3 is the bare minimum. Very simple, right? We do this because we always want to ensure that we are getting back 3 times more, 4 times more, or 5 times more on what we are risking. So first things first, you have your strategy nailed down. Like I said, before you get funded, make sure you test your edge and really make sure that you have a proven edge before you even try to get funded. But once you got that sorted out, next is the risk management. Once again, this is where majority of traders fail, right? They are not able to nail this part down right. So this is where I want you guys to risk 1% until balance gets to 98K or 105K. Okay, there's a rationale behind this. It's going to make your life a lot easier. Like I said just now, we will suffer losses. It's part of the game. You cannot avoid it. You will suffer losses. Let's say the first trade that you take, you're unlucky. Or maybe you were disciplined. You execute your trade, but you still suffer some form of losses. So you lost the first trade. All right, cool. So you're down 1% on the first trade that you take. Okay, cool. Do you give up? No. It's part of the process. We have learned that, right? So what happens next is that, let's say you still are going through a slump, like a losing streak or something. You lose another 1%. Okay, now remember, every time you lose, it's harder to get back to break even. It's always going to be harder to get back to break even. Okay, so you lose 1%, you lose another percent. Okay, cool. Now we are at 98K. Now we have lost 2% of our trading account. This is where you start to de-risk. You decrease your risk from 1% to 0.5%. Now, the reason why we do this is very simple. Remember, this is your room to breathe, right? This is essentially the amount of bullets you have. If you risk 1% per trade, you have 10 bullets before you get out of the challenge. So once we get down to 98K, right, let's just put this negative 2% right there. Start to de-risk, right? Start to de-risk and drop your risk down to 0.5%. So instead of risking 1% per trade, you risk 0.5% on each trade. Okay, cool, 0.5%. Next trade, bam, you still lose it, right? You seem to be going through this slump, you don't really know what you're doing. It's okay, it's okay. We can recover back from this because right now you're only down negative 2.5%, right? And it's recoverable, right? Negative 2.5%, we can recover it with just one trade with a 1:3R. This is why we do what we do. With just one trade, you're able to get back to break even and actually get a little bit of profit, 0.5%. So, I believe if you use our trading strategy, you have lost 3 trades in a row, you are most likely going to be more cautious on the setups that you take, and you start taking high probability setups, right? You finally start to get your shit together and start taking high probability setups. As a result, the next trade, you risk 0.5% because we have de-risk. Remember, we have de-risk. So you win the next trade. Okay, you win the next trade. So that's about 0.5%, and it's 1:3. Yeah, it's 1:3. So it's 1.5%. So right now you make about 1.5%. You went from negative 2.5 to
-1. What do you do right now? Right now the balance is 99k. You go back to risking 1%. Because as long as it gets below 98k, you de-risk. But right now you're back to 99%, so you can risk 1%. Let's say for some reason you risk 1% here, it doesn't work out. You lost this rate, right? So -1%, now you're back to -2%. Okay, it's cool. You're back to square one, right? You're back to -98k. Same thing. Continue to de-risk. Back to 0.5%. Right? So we're back to 0.5%. Let's say we want the next trade. Okay, this is like a hypothetical scenario. I think this is a very realistic scenario because you're not going to win every trade, but you're also not going to lose every single trade. Like any guy can just click the buy or sell button and start winning a bunch of trades. Yeah, you don't even need to have a trading strategy. That's just how mind-blowing trading is, right? So let's say, like I said, you have a solid trading strategy and you decide to win the next trade. So right now we are at -98k, risking about 0.5%, and we get back to 99k. Okay, cool. Get back to 99k, and now you start gaining your confidence, your motivation, your ability, your morale back. Okay, cool. At this point of time, right, you have take 5 trades. Let's look at the win rate of this. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. Okay, we take 6 trades. What is the win rate? Okay, we lost 1, we lost another 1, we lost 3, we lost 1, 2, 3, and then we won 1, and then we lost 1, and we won another 1. So we won 2 trades. Yeah, and then we lost 4. Like I said, 33% win rate, right? That's what we are aiming for anyways. Next trade, you win the next trade. So, like I said, back to 99k, you are risking 1% right now. So we make about 3%. Okay, 1%. Okay, so you're at 102k, so about 2% right there. Okay, cool. So right now you're at 102k. You're up 2%, but you cannot increase risk rate yet because, like I said, only increase risk once you reach 105k. Okay, once again, next trade, let's say you're on a roll, you win the next trade. Okay, cool. Right now we are at the 5% mark. Now, okay, this can happen in a lot of ways, right? You can lose the next trade and then go back down, but just stick to the plan. Like literally, once price get below 98k, de-risk. If not, just continue risking 1% until you reach about 5%. Okay, so let's say the next trade you got lucky and you win the next one. 2%, you make about another additional 3% because you get a 1 to 3 risk to reward, right? And now you're at 5%. Okay, now you're up 5%, but the profit target is 10%. In the first phase, it's 10%, the verification phase is 5%. If you are in the verification phase, congratulations, you are funded. But you are in the first phase, which means you need the 10%, right? So now, to make your life simple, this is where you can start increasing your risk from 1% to 2%. And I put here, optional. It's completely optional. It's really up to your risk tolerance. If you want to do this, you're feeling a bit of risky, you're feeling a little bit of adventurous, do it. Right? I will actually recommend you to do it because what happens when you increase your risk to 2%? You win the next trade. You pass the challenge. You pass the challenge just like this. That's why I always say, you're one trade away. You're just one trade away from winning the trade. Yeah, okay, once again, this is something optional, right? If you don't increase your risk, let's say, you don't have to, by the way, right? Like, you continue risking 1% and you make about 3% on the next trade, right? And this is if you are just getting 3R on each trade. I believe you can get 5R, 10R. We see some people got 1:50R. I can't do it either. For me, it's like I need to gain it out. For me, the max is like 10R. Yeah, so we get back to this. Let's say, like I said, you don't follow this. You just continue risking 1%, so you cover this. You just continue risking 1%. Okay, it might take you a little bit longer, but like I said, what if you get 5R? What if you get 5R in the next trade? Like I said, you aim for 5R, right? You pass the challenge as well, right? You risk 1%, you make 5%. So yeah, I'll leave it up to you, optional, but I will actually recommend you to do it because it makes your life much more easier. Cool, so that's for the first phase. That's the 10%, right? The first one. The next one is 5%. Dude, the next one is 5%. So use the exact same strategy. You don't deviate from your plan. Your plan works, just stick to it. The verification phase is the same thing, right? It's just that it's the exact same rules. It's just that the profit target is 5%. Yeah, so I'm not gonna go through it again, but yeah, you get the gist of it. Just stick to the plan. Okay, now once you get funded, right, you pass the first 2 phases, you're officially a funded trader and you do have 100k in your account or 50k, whatever, what's next? Let me tell you something. This is only the start. Do not get complacent, do not get overconfident and start taking a bunch of low quality trades. Continue to be disciplined, continue to follow your trading plan, continue to do your pre-market, post-market and your market routine, right? Continue being disciplined. Very important, because if not, at any point of time, you can lose the funding. Your job right now is to maintain your funding, right? Is to ensure that you don't break any rules that will actually cause you to lose the funding. And also, you are not, like aiming for unrealistic returns. A lot of new beginner traders, what they do is that after they get funding, they try to aim for the moon and try to get 10%. Because if they make 10% on a 100k account, that is $10,000 per month. And that's the magical number, right? We all want to make 10k per month. Now, do not be pressured to do this. Because if you do that, right, if you try to rush it and you try to make 10% within 1-2 weeks, you are going to be prone to taking a bunch of low quality trades and then you're going to lose and then you are going to draw down. And trust me, going to a drawdown on a funded account, it is not fun, right? At this point of time, your sole focus is capital preservation. You should not be worrying about making a shit ton of money. No. You should be focused on not losing any money, all right? So at this point of time, like I said, your job is to maintain funding. Don't break any rules, right? Respect the drawdown, reduce your risk exposure, and I will advise you to aim for plus 5% return per month, right? Don't need to aim for 10%. No. Just aim for plus 5%. This is very realistic and this is very possible. I've done it. The coaches have done it. Students have done it. Very possible, right? So if you think about it, right, on a 100k account, if you make 5% per month, that's an additional $5,000 in income. And that's on top of your current job. Right now, maybe let's say you're working and you're making $3,000 per month. If you make 5% per month, that is $5,000 in additional profits. Right? So that's just something good to have, right? Don't need to aim to make 10k per month, right? I would say the problem with this is that, like I said, you are going to be more emotional. You are going to deviate from your plan more because you're obsessed with the money. When I always say, focus on the process of becoming a good trader. Because what happens when you become a good trader, when you become a better trader, that is when you can start to scale your account, all right? That's why I say, if you want to make more money, right, you want to make 10%? No. The problem is not with the returns. It is your capital. You are still considered as undercapitalized. If you are trying to make 10k per month, in that case, you need to focus on getting more capital rather than risking more per trade or aiming for unrealistic returns, right? So in this case, let's say this is your first 100k account, right? And then you find that, $5,000 per month, that's not enough. I want to make 10k per month. I want to scale, right? In that case, don't worry about that first. Maintain your funding, right? At least try to be consistent on this existing funded account for a few months, right? 2-3 months before you attempt another 100k challenge, right? And what I would advise you to do is to reinvest your profits, right? Take the profit that you earn from this funded account, the payouts, and go and purchase another funding account. That is when you can really start scaling your trading account, right? So once that is done, you purchase another 100k account, and then you pass the 2 phases because you follow our risk management strategy, you follow our mechanical framework, bam, you got 200k in your account right now. I mean, you have 2 different 100k funded accounts. So you are managing about 200k in total capital. In this case, if you are making 5% of 200k, guess what is that? That is your magical 10k per month, right? So you can see, you're still aiming for 5%. It's just that you have more capital to play with right now, right? And you are also disciplined, right? Because you don't need to rush to make 10%. You just need to make 5% on both of these accounts, right? So that is really when you can start scaling, right? And then eventually you scale all the way up to having 400k in capital. The best case is having 2 million in your trading capital, but let's say you really become a professional trader, right? You know what you are doing. You have good risk management rules in place. You have a proven profitable trading strategy. You are consistent. Then you can slowly start to scale to 400k. Like I said, when you're in doubt, just follow the timeline that I gave you in the previous lesson, right? The funded roadmap. Yeah. So eventually you scale up to 400k and you make 5% on 400k. How much is that? That is $20,000. Additional $20,000 per month, bro. At this point of time, you are eventually like 6 figures trader, because $20,000, and if you make that over 12 months, I don't even know how much is that. That's like 240k. Yeah, and if you make 10k per month for 12 months, that is a good 120k. So if you can just make 10k per month, right, you are essentially like the top 3% of traders already, right? Yeah, like I said, man, 5% per month on a 100k account is good enough, man. That's like $60,000 a year, bro. That's like additional income. So please, guys, do not focus on, you know, making unrealistic returns, because like I said, yes, you can make 10%, right? This might just be a limiting belief. You can make 10%, but know that it's going to be very difficult to maintain making 10% per month every single month. It's going to be much more easier to make 5% per month every single month. And also, last thing I forgot to mention, right, is to have a buffer of 2 to 5% that you leave in your account so they can take losses, right? Because like I said, when we are funded officially, we want to focus on capital preservation, which means we don't want to risk too much on our trade. We still want to continue risking 0.5 to 1% per trade, continue doing that. Just that right now, we don't have to increase our worries or whatnot so that we can pass the funding challenge, because we already got the funds, right? In this case, your focus is to not go below this black line right here. So when you do make profits, right, let's say you're up about 8% over the span of 2 months, right? So this is month 1 and then this is month 2. Now you're up 8%. Do you want to withdraw all of these 8%? You can, right? But if you do that, bear in mind, your account go back to 0%, right? And it's going to be easier for you to drop into this draw round. Like I said, this is the zone that we don't want to enter. In that case, what I recommend you to do is to have a buffer. What I mean is that if you're up about 8%, maybe go and withdraw 3% of that profits, and then you leave another 5% remaining in your account, so that your account balance is 105k at all times, right? So that you can take a few hits before you drop down to the drawdown zone, right? So yeah, that's something you can do, have a buffer. Once again, this is completely up to you, but I would actually recommend you to do it. Because if you want to maintain your funding, don't withdraw everything that you have made, right? Leave it to compound also as well, and also leave it to have some sort of buffer, right, that will protect you, that will shield you from the losses that are inevitable. Because like I said, eventually or at some point of time, you might encounter a losing streak. If you withdraw all your profits, you go back to 0%, guess what? The losing streak is going to cause you to tremble down, and it's going to be quite difficult to recover psychologically, right? Because this is really like real funded account. This is no longer like a challenge account or a verification account. No, this is actually a funded account. So your trading psychology is going to be a little bit more tough. I get more done in one day than most people do in weeks or even months. And that's all because of this one thing called focus. Every single millionaire out there, self-made millionaire, has this particular skill. They understand the ability to focus, and they focus all their energy towards one thing. Now, what does it mean to truly focus, right? That is a few ways which I'm going to teach you how to focus. Like if you're able to get into the flow state and actually does deep work for like 4 hours straight every single day without fail, trust me, you're going to accomplish a lot in a very short amount of time. So basically, let's define what is focus first. So let's say there's guy A right here, and then there's guy B, okay? So they both are doing the same task, right? Maybe that could be they want to start a business, right? They want to start a business. So guy A right here, he spends probably about 8 hours working on the business. Guy B right here, he spends about 4 hours working on the business. So like less than half, right? Basically less than, I mean it's half, right? He spends half amount of time working on the same business. Now, here's the differentiating factor. Guy A have probably like I'll say like a 3 out of 10 focus. Which means that when he is working, he's going on through Instagram, scrolling through social media, looking through TikTok, and also going to YouTube and constantly distracting himself from what he needs to get done, which is the business. Now, guy B, when he focuses during these 4 hours, he's extremely focused during these 4 hours. That means during these 4 hours, he's solely focused on working on a business and nothing else. He's not thinking about what girl he should message on Instagram or what his Tinder match message him. He's not thinking about any of that. He's fully focused on the business. So he have like a 8 out of 10 focus. 8 out of 10 focus. So in reality, if you look at this, who do you think is going to get more shit done? Guy A, which is kind of distracted, is kind of like not really going all in into his business, or guy B, who's going all in into his business and he's having like, and he works lesser. obviously guy B, because he's able to focus better. So that is what I mean when I say that focus is a multiplier, right? Focus is a multiplier. That means that, let's say, instead of guy A, right, we switch to guy C. Guy C, he works for 8 hours on the same business, and this time round, he has an 8 out of 10 focus as well. He's able to focus solely on the business itself. In this scenario right here, compare guy A, guy B, guy C. Guy C is going to achieve the most. He's going to be the king. Simply because he was able to work more than his competition and he's able to focus better than his competition. So that is why it is essential that you actually direct your focus towards the project that you are working on, so that you can truly outwork your competition and actually win them. Now that you guys have understood what is focus, I just wanted to show you what actually focus looks like. All right. So this is your input, right? So this is your input and all that stuff. And then they're going to funnel it into one thing, and this is your focus. And then this is your output. So as you can see right here, this is your input, and then this is your focus, and then this is your output, right? So whatever energy you can single-handedly focus on, it will directly leads to your output. So if you can increase your input, you can increase your output. And how do you increase your input? You can't increase your input because your input, you can increase your input by doing things to optimize your time, energy, and attention. But at some point of time, these things are limited. Your time, energy, and attention, these things are limited, these things are finite. So you will eventually run out of that thing during the day itself. And in that case, you need focus to multiply that and compound that time, energy, and attention. Once again, it's a multiplier. Focus is a multiplier. So if you are able to have a solid input and you times your solid focus, like you actually focus very, very well on the task that needs to be done, and then guess what? Your output is going to be insane. Your output is going to be off the charts and stuff. So now that you have understood the importance of needing to focus, the next step becomes, how do you actually focus, right? Let me tell you what my schedule actually looks like. Every single day, without fail, I work at least 4 hours. I have at least 4 hours of deep work blocks. That means during these 4 hours, I'm working continuously, focusing on either trading or on the business or making content or communicating with my team members through meetings or whatnot. Basically, every single day, I spend at least 4 hours on the business. And that's like the low end. Most of the time, I spend at least 12 hours working on my business every single day. And I'm at that stage where I could easily just not do anything, right? I could easily just, you know what, fuck it, go for a vacation. I'm already a millionaire, so why am I still working so hard? It's probably because I enjoy playing the game. And I just find that life is just a game and you just have to win it, right? So that is why you need to be able to learn how to focus, because if you cannot focus, there's no way you can work 12 hours a day. And your competition, guys like me, who are working 12 hours a day, are going to absolutely kick your ass. That's the honest truth. Because the guy who's able to work more than you, he's gonna achieve much more than you, and you will never be able to reach him. He will always be running laps around you. So the question becomes, how do you exactly focus, right? There is 5 factors, 5 keys that I use to actually amplify my focus and help me to get my ass down on the chair and actually focus for 12 hours a day, just like a millionaire. So now I'm going to show you exactly how to do that. The first factor is actually your morning. Why did I put the morning first? If you can win the morning, you can win the day. The morning is the most important factor inside these 5 factors. Why? Let me give you a scenario. This is what I do last time, by the way. You wake up, you grab your phone, your alarm rang, you hit the snooze button, bam, go back to sleep. And then your alarm ring again after about 30 minutes. The time now is 9 a.m. and your alarm was supposed to ring at 6 a.m. and now it's already 9 a.m. And then you finally decided to not snooze the alarm anymore because you are finally energized after sleeping in, after snoozing the alarm. So you have to grab your phone. First thing you do, you scroll through TikTok. Second thing you do, you open Instagram to see what your friends are doing. And then you chance upon this girl with bikini, with her ass cheeks out, and then you start to get the urge to go to the dirty website. So you go to the dirty website, and then you spend another 1 hour trying to find a perfect video. Boys, you know what I'm talking about. Trying to find the perfect video, and you start dispersing the energy. Boom. You just lost your energy for the day. How the fuck are you going to conquer the world where you've just lost all your energy in the morning? Not even in the day, or not even in the afternoon, not even at night. In the morning, the first thing you do is to voluntarily throw away your energy, your time, and your attention. When you start your morning that way, you will not be able to focus for the entire day. So it is important that you actually win the morning, because if you can win the morning, you can win the day. Right? So what does a perfect morning routine actually looks like to me? Remember, a morning is important because it gives you, or rather it gives your subconscious the ability to go and conquer the day. It lets your subconscious know that, fuck, I'm stacking up wins after wins in the morning. So I'm going to continue doing that throughout the entire day. So this is what an ideal morning routine looks like to me. First things first, my morning starts the day before. So I would plan the day the night before. Right? It is very important that you actually have some sort of to-do list. Right? So what I like to do is that the night before, I will actually plan out my day and actually write out exactly what needs to be done the next day in order for it to be a fruitful and productive day. And that is where I have my get shit done list, right? Basically, I'll try to schedule say that, okay, I have this meeting that I need to meet. I need to trade at this particular timing. I need to, work on the business, right? So I have 3 tasks. Then those are the 3 tasks that I need to accomplish the next day. So I plan the day the night before I go to sleep. Make sure I plan the day. And then I don't really like to scroll through my phone right before I sleep, because it gives you like this blue light and it's going to affect your sleep quality, and it's going to make you much more harder to sleep. So what I do is I actually read a Kindle or a book before I sleep, right? So that I can really sleep much more better and stuff, improve sleep quality and stuff. So I will try to get about 6 hours to 7 hours of sleep, right? 6 hours to 7 hours of quality sleep. Now the keyword here is quality. Quality sleep, right? Ideally, in order to get quality sleep, you need to get into this REM state. I don't really know how to explain it because I'm not a fucking neurologist or whatsoever. But you need to get quality sleep. And you can get quality sleep by, what I do is that I have blackout curtains. So I'll just like completely have a room that is pitch black. And then my aircon is also set at like the perfect temperature, which is about 24 degrees Celsius for me, right? That's for me personally. It's not too cold, but it's also not too warm. So that's what I do, right, to gain quality sleep. And I make sure that I try to sleep on time every single night, even though it's quite hard, but try to have a consistent sleep schedule. If you can have a consistent sleep schedule, and then you're able to have a much more high quality sleep, and you're going to wake up with much more energy and much more focus. So 6 hours to 7 hours quality sleep. And then some of you motherfuckers out there is going to be thinking, 6 hours? But you have to sleep 8 hours a day. Bro, how the fuck can you sleep when you are broke? I genuinely could not sleep when I was broke. When I was poor, I would literally kill myself if I sleep more than 8 hours. I will feel so shameful because sleep is a luxury. It is not a... 8 hours of sleep is a luxury. It's not a necessity. 6 hours sleep is all you need, honestly. Right? I'm not a fucking scientist. I don't recommend this to anybody who is not a high achiever. This is what I do. I'm just showing you guys what I do, honestly. So this is the night, right? This is the night. So this is the moon, right? So this is at night. So I'll probably sleep about 10 p.m, wake up around 5 a.m, right? Depending on what time I wake up. I just make sure I have 6 hours to 7 hours quality sleep. Once I wake up, first thing I do is to actually go wash up, right? Actually wash up, brush my teeth, wash my face and shit, right? Just for me to get ready for the day. And then most importantly, I'll make my bed. It is extremely important that you actually make your fucking bed. 90% of people don't make their fucking bed because they are either lazy or they're snobs. Because when you make your bed, it acts as like a subconscious win for you. And also at the end of a long day, you want to come back home to a bed that is well made. Right? The last thing you want to do is to come back home and see your fucking bed is messy as shit because you don't throw your blanket and then you still had drinks from last night from your one night stand or whatnot. Right? Ridiculous. Make your fucking bed. This is exactly why in the military, right, we actually make our bed every single morning. And I can tell you that because that is what I do back in the military. When I was serving, I will make my bed every single day, and I could see literally every single one else will be making the bed also because it is a requirement, right, to make our bed in the morning. Because if you cannot make the bed, if you can't even make your own bed, how the fuck are you going to change the world? So make your bed in the morning. So I wash up, make my bed, and then what I do is I have these two non-negotiable called meditate and visualize. Right? I'll talk more about meditating later because it's one of the factors to improve focus. But meditate and visualize. Visualize is where I'll close my eyes, sit there, and visualize myself reaching the goals that I've set out for myself to achieve this year. So this year I want to make $5 million. So I'll visualize my bank account balance having $5 million. This year I want to reach 1 million subscribers on YouTube. Now I'll visualize my YouTube subscriber count turn into 1 million and there will be like a smile in my face, right? Visualize is very important because everything happens twice. First in your mind, second in reality. So whatever you can believe in, whatever you can conceive, you can achieve it. If you direct all your energy onto the thing, on the destination that you want to move forward to. So meditate, visualize, and also make sure that I will drink water, right? Because you have been well asleep for like what, 6 hours, 7 hours, so you need to some sort of water to hydrate yourself once again. So drink water, and this is pretty much my morning routine if I'm not wrong. This is pretty much my morning routine. Very short morning routine which can be done within 30 minutes. Right? Within 30 minutes. Imagine this, guys. Within 30 minutes, you're able to get focused for the entire day. And all you need to do is just spend 30 minutes doing these things. And you're able to focus your entire day. Right? So that is for the morning. And like I said, it is extremely, extremely important that you don't actually go through the shitty bad habits, right? Because this is how the mind works, right? So there is two types of wavelength, your chaotic wavelength and your peaceful wavelength. So if you wake up in the morning and the first thing you do is to actually scroll through TikTok, and then you start scrolling through Instagram, and then you start responding to emails, and then you start looking at your WhatsApp messages, and you start looking at Telegram, you start looking at YouTube recommended videos, and you start visiting the forbidden websites. This is what your wavelength look like. It's completely chaotic, right? And when your wavelength is so chaotic, you will not be able to move and start working. And when you do actually start working, after you did your shitty morning routine, which is scroll through all this bunch of bullshit, you won't be able to focus on your work anymore. Because that is how your mind works. Your mind cannot transit from chaotic wavelength to peaceful wavelength. If it's chaotic, if you start off the day with a chaotic wavelength, chances are the whole day is going to be chaotic and the wavelength is going to be fucked up and there's going to be a lot of chaos in your structure and you won't be able to focus on your work. But however, if you do this, you will have somewhat like a very peaceful wavelength, right? Like a Zen wavelength. And when you have a Zen wavelength, your brain is not filled with all this dopamine, your brain is not filled with all this like fucking degeneracy, you will be able to focus much more better. And when you're able to focus much more better, guess what? You're going to make much more money because you're able to get much more work done in a day. So that is the first thing I want to talk about, which is actually the morning, right? The morning, like I said, guys, I cannot emphasize how important it is to actually win the morning. You need to fucking win the morning because you can win the morning, you can win that day. So stop being a freaking whip, stop being a fucking loser and actually do something in the morning, right? And by the way, I forgot to mention, but after I've done with this, I will do my 4-hour deep work block. I will actually do my 4-hour deep work block until about lunchtime, and then that is when I break for lunch. So that is pretty much how my whole morning goes. Right, so, okay, the reason why I want to emphasize on the ability to focus, or rather I want to show you guys and prove to you guys that I'm able to focus by making sure that I record this whole video without getting distracted and having like a very smooth train of thought, right? So the second one is what I call your awareness. This is the second factor to focus. Now, what the fuck is awareness? Awareness is the ability to be aware that you're having intrusive thoughts. You know that feeling where you are working and then you start to check your email inbox. And then you start to go through your Spotify playlist and change the music. At that point of time, you must be aware that you're doing shit like this and you are not focusing on the work so that you can direct your focus back to the work itself. That is awareness. That is awareness. Or another scenario is you could be having a meeting with your team members and then start to think about what you should have for lunch later. At that point of time, you need to fucking direct your focus back to the meeting. That is awareness. So how do you build this awareness? Because if you don't have the awareness, right, you will go through this rabbit hole of distracting yourself from your work. And I heard this beautiful quote the other day. The magic you are looking for is in the work that you are avoiding. So if you can just do the fucking work, you will be able to feel much more better, right? And like I said, if you don't have proper awareness, you are just going to go through this rabbit hole where you're just constantly distracting yourself with useless and meaningless distractions that does not benefit your life or your business. And you're just going to waste a lot of time, energy, and attention. So how do you build awareness? By doing this thing called a 10 minutes meditation. Meditation has been proven and has been tested, and we all know that meditation actually helps to improve focus, and it actually helps you to build mindfulness. And mindfulness itself is awareness, right? So how do you actually meditate? I'm not telling you to shave your head bald or go to the mountains and just sell off all your possessions and just sit there and just close your eyes and pray to God every single day. No, that is not how meditation works. Meditation is actually fucking simple. I can't emphasize how important, or rather how simple meditation is. And the thing about meditation is that we all know that it's beneficial for us, but we just don't want to do it. Like, it's just lazy for us to do it. Right? We are just extremely lazy. Okay, so let's just go through step by step, all right? So first of all, the length of the meditation. It could be 10 minutes, it could be 20 minutes, it could be 5 minutes. Whatever works best for you. If you are just a complete beginner, I would actually recommend you start off with 5 minutes and then slowly move on to 10 minutes and then 20 minutes. And eventually you can go through like those fucking meditation retreats where you stay inside the retreat for like 3 days and just meditate the whole day, which I don't know how people do it, but yeah, you can probably go try that next time. But you can start off with 5 minutes meditation, right? Make it very simple for you, because if you start off with 20 minutes meditation, right, you're going to meditate for one day. Like today you meditate for 20 minutes and then tomorrow you might do it again. But then eventually you'll find it very hard to consistently meditate because that it's just too hard. It's just too long, right? It's 20 minutes is too long. You don't want to do it. But if you start off with like an easy 5 minutes meditation, chances are you're going to do this much more consistently day in, day out. Right, so start off easy, 5 minutes, and gradually, progressively overload when you are ready to do so. So how do you actually meditate? It's actually quite simple. First things first, find somewhere quiet. Right, you just draw a meditation monk right here. So first things first, find somewhere quiet. Right, it could be in your room, or it can in your living room, or it can be in the office pod, or whatever it is. Just find somewhere quiet, because the last thing you want to do is to be fucking meditating at a party, right? Nobody fucking meditate in a club, right? It's extremely stupid. So what I need to do is find a place that's quiet, and secondly, I will actually recommend you to get noise cancelling headphones, right? This is what I have. Get a noise cancelling headphone so that you can just shut yourself away from all the distraction and just focus on inwards yourself. Next, sit there, right? Actually, close the eyes. Close your fucking eyes, buddy. Yeah, so actually sit there. And what I want to do is to start breathing in. Start breathing in. And then breathe out. Breathe in, breathe out. Just do this. This is it. Just do this. Just sit there, close your eyes, find some place quiet, and then just breathe in and breathe out. And just do that for 5 minutes. But what makes meditation is so hard is because you're going to get intrusive thoughts. You're going to start thinking about, oh fuck, what should I have for breakfast later? Oh, yesterday I quarreled with my friends and I said something that I don't mean. You're going to start thinking about all these intrusive thoughts. And that is when mindfulness comes in. Whenever you have all these intrusive thoughts, right? You need to bring your focus back to the breath. Right? It could be the sensation of the air going into your nostrils and coming out of your nostrils. So bring your focus back to that. Or it can even be the sensation of your diaphragm or your stomach going in and out, in and out. It could even be that sensation. But basically, you just focus on all these sensations and just be mindful and just stay present, stay in the present moment. So that is how you can really build awareness. And when you are able to do this, right, you will be able to be much more aware when your emotions come along. What I mean by that is that if you're able to do this and be very mindful when you are meditating, right, you will realize that you are not going to blame yourself for having these thoughts. You're just going to acknowledge them and then move on, right? Just, okay, I see your thought, acknowledge it, and then move on, right? There is no point of you actually blaming the thoughts. So don't do that. Just acknowledge them and then put your focus back to your breath. And just sit there and do it for 5 minutes or even 10 minutes. And then slowly, the key part here is do it for 21 days straight. If you can do it for 21 days straight, you'll become a habit. And at first, it's going to be incredibly hard. Let me tell you first, I have been meditating for like 3 years right now, and at the start, it's fucking hard to meditate, right? It's goddamn hard to sit there for 10 minutes straight. If I sit there for 10 minutes straight, trust me, this whole 10 minutes, I'm gonna be either thinking about something or falling asleep. I would not be able to focus on the present moment and just focus on the breath. But right now, I'm in my 3rd year, and yes, I still get thoughts, I still get intrusive thoughts. It's normal, every single human does this. But what I'm able to do is to have this awareness, to have this space where I can just pause when I have some sort of intrusive thought and then return my focus back to my breath. So that is really how you can build awareness, right? Very, very good point. Meditation. There's other ways where you can build awareness like detachment and all the stuff, but really the root of building awareness is really through meditating. If you can just do this for 21 days straight, I can guarantee you, your life will fucking change, man. Your life will transform in a way that you could never ever comprehend. You'll start to realize that you are actually much more focused when you are working, and you are also much more mindful and present, and you're able to be much more calm and in control of your emotions. All of these are side effects that you'll realize only when you start meditating. Now the third factor is actually your diet. Now for diet, right, I don't particularly have like a specific diet to recommend to you guys because I probably never really tried all this carnivore diet, keto diet, vegan diet. I never really tried all this shit, right? What I do is very simple, right? I eat protein and I eat organic foods. I've been doing this my whole life. My whole life, I've been eating animal protein and organic foods. So organic food can be things like fruits and vegetables, right? Basically a healthy shit. And then animal protein could be things like beef, pork, chicken, right? Even salmon, even fishes, right? So For me, my diet is actually very simple. I eat chicken breast and some vegetable and some rice and some sort of carbs, right? But the thing is, I actually wouldn't recommend you to consume too much carbs, because when you consume carbs, right, do you realize that it makes you feel very groggy and very like sleepy? Like it makes you feel like very sluggish-ish because you consume carbs. That is why I don't really like to consume too much carbs. Yes, I will consume carbs if I need energy to do so, but I won't like overdo it, right? So mostly I'll just be focusing on animal protein, right? Naturally protein sources like your beef, your pork, your chicken, and your salmon and stuff. Yeah, so my diet is quite simple. It's just chicken and vegetable and rice, or salmon and vegetable and rice. Sometimes I have a steak and sometimes I have some pork, right? But most of the time it's just chicken and salmon. And some eggs as well, guys. I forgot that. Some eggs. Right. So the reason why you cannot consume carbs is because that if you consume carbs, your body is going to spend more energy digesting the carbs rather than working. You want to direct all your energy into working instead of to digesting whatever that you just consume for lunch, right? So no carbs, or rather not no carbs. You can have carbs, but have it in moderation. Don't eat too much of it. And also, this is a massive no-go. Junk food, processed food, fucking canned foods, Maggi noodles, instant noodles, all this shit that tastes good, right? Just try to stay away from them, right? Fucking fried chicken or French fries, all this shit, it makes you a fat fuck. And when you become a fat fuck, you lose all sort of motivation and you lose all sort of self-esteem and self-confidence. So just completely get rid of all the fucking junk food. It does nothing but makes you feel good at the moment. And fast food is not necessarily fast or cheap. You can find food that is cheaper than fast food, like chicken, and you can cook it in a way where it's healthy, right? So just get rid of junk food. The reason why is another thing, same thing as similar to carbs, but junk food is actually worse than carbs, right? When you eat junk food, you not only feel like shit, your self-esteem also goes down because you know that you're not supposed to eat this food, but you eat it anyways, and you feel like a fucking loser, and it feels like a weak and docile bitches. So, get rid of junk food. Another thing that I don't really like is also sugar. Right? Sugar. I don't know if you guys can see right here, sugar. Yeah. Let's move this. Sugar. Yeah, sugar, junk food, carbs, no go. Sugar because like, when you fucking eat sugar, it just gives you like this energy boost for like 5 seconds. And then you crash. That is why there's the term called the sugar crash or some shit, right? Basically, you feel good for a short amount of time and it starts crashing, and you're gonna start feeling more shit than ever, and you start to crave the sugar again. And just end up consuming more sugar and crashing and more sugar and crashing. So, completely, diet is very simple. We already know what's the proper diet that we need to eat, right? We look at the health pyramid and the fucking plate, which shall show you like the portion that you should be eating, like this should be the meat, this should be the vegetable, this should be carbs, right? We all know that that shit is the formula to a healthy diet and a very good health, and is able to make you live longer. But the thing is, we still don't do it. And we end up indulging in shit like this, which does not actually fucking help you at all, and you're just putting poison into your body. You're completely just putting poison into your body. Just stick to animal protein, organic food, that's it. As simple as that. Keep it as simple as possible. No need to complicate yourself and do shit like keto diet or vegan diet or carnivore diet, right? You can go experiment with them if you want. Maybe you improve your focus. But for me, I've been doing this and it has made me like a lot of money just by sticking to this diet, so I just continue doing this. But you know what's one thing that actually is like my diet hack that nobody actually kind of knows about, or rather nobody really talks about, is this thing called intermittent fasting. Once again, I've been doing this since I was 17 years old, so probably about 4 or 5 years right now. I've been doing intermittent fasting, and this is where I have a 16 to 8 window. That means I will only be eating for 8 hours. Like during this 8-hour window, I'll be eating, and then during a 16 hours window, I'll be fasting. I wouldn't be eating anything. So for me, what I do is that I will probably eat from 12 p.m. lunch timing to around 8 p.m. So before that timing, before 12 p.m. and after 8 p.m., I wouldn't be eating anything. I will only be drinking water. Right? The reason why I do this is because it has been proven to actually increase your testosterone, and it has also been proven to actually improve your focus as well. Right? For me, I don't really like eating breakfast, so this is a good key to me, right? I don't like eating breakfast because I feel like I have to earn that breakfast, right? You cannot be waking up and immediately you got access to food. Compared to me, I wake up, I'm extremely hungry, but I just go straight to work and I just get motivated to finish my work so that I can actually consume my lunch at 12 p.m. And this takes a lot of discipline to do, but if you're able to do it, you can have a much more clearer and better focus. So for diet, like I said, just don't need to complicate things, right? You can go experiment with all types of different diet if you want, but this is my personal diet. I just stick to intermittent fasting. I stick to a very clean and organic diet where I consume animal protein and organic food, and I also drink lots of water. I drink about 4 liters of water every single day. And yeah, I try to stay away from fast food and all this unhealthy bullshit as much as possible. And that is simply how I use my diet to actually focus, right? It should be quite simple, quite straightforward, no jargon, no fluff, no bullshit, right? So next, diet morning awareness. Next, I want to talk about what we call, or rather this is actually one of my principles, all in or nothing. This factor is what I really have, or rather it's like a philosophy that is within me. Whenever I start any project, I have to finish what I started. If I start this project to start this business, I have to finish the business. If I start this gym session, I will finish the gym session without missing a single set. If I start running this marathon, I will finish this marathon no matter how fucking tired I am, no matter how many blisters are on my leg and whether my leg can't even move anymore, I will still complete it. This is how I live. All in or nothing. It's either I go all in into this one thing or I just don't even start at all. This is my mindset, and this is the mindset that I always translate to my team members as well. Either you put 100% of your effort into something or just don't bother doing it at all. Right? You cannot be half-fucking this thing and expecting it to actually work. You cannot be half-fucking your gym sessions and expecting to become incredibly jacked within 6 months. It's absolutely delusional, right? You're absolutely delusional if you can do that. So all or nothing means you must finish what you started. Is to finish what you started. So it could be simple things like if you listen to a Spotify song, listen it from the start to the end. Or if you watch a Netflix show, watch it from the start to the end. Or if you read a book, try to read it from the start to the end. At least read from the start to the end for the whole chapter, instead of reading like halfway through the chapter and then throw away the book and then move on to the next book. Finish what you started. If you can do this, you'll be able to follow through. Why it's important to follow through is because that most people, what they do is that they start something and then they encounter some sort of obstacle or some sort of problem and then they fucking quit. And then they will start another thing. It could be another side hustle, and then they encounter obstacle again and then they fucking quit. And then they start again, obstacle again, and quit. This is a vicious cycle. Because if you think about it, this guy just started 3 things and he half-fucked everything because whenever he encounter any sort of resistance, he actually give up. Compared to this one guy who actually started this one thing and he focused all his energy into overcoming all the obstacles that stand in his way and he actually don't quit, right? Instead of spending all his time on trying to find the next project to work on, he spent all his energy on conquering the obstacles. Eventually, he will win. Because he was able to direct all his focus into one thing, and he got extremely good at that one thing. He's able to eliminate all the obstacles and adversity that he faced along the way, all the challenges, he's able to overcome them. Eventually, he wins. So this is what it means, or rather what it takes to win. To go all in or nothing. It's either you put your 100% effort into whatever that you want to start, be it trading or business or entrepreneurship or YouTube or whatnot. Follow through. Follow through all the way until the end. All in or nothing. Now this is more of a philosophy rather than like a factor, because okay, the reason why it helps to improve my focus is because I know that when I start something, right, when I start my deep work session, I have to finish the task that needs to be done for the deep work session. Then that means that during that period of time, during that period of deep work, I will not be distracting myself with temporary pressure or all the instant gratification and useless shit that does not benefit me at all. Like fucking scrolling through social media or looking at my Gmail inbox when I'm not supposed to do so. The final factor is your environment. Now for environment, there's two types of environment, your physical one, and then there's also your electronic environment. So I'm going to talk to you one by one. First things first, your physical one. The physical one is very simple. Look at the table that you're sitting on right now. Is it messy? Is it complicated? Is it filled with coffee from yesterday? Is it filled with your snacks wrappers all around? Is it filled with like 1,000 different books on your table which you have not read before? Physical, right? That is your physical environment. It's basically everything around you. Physical environment, right? It could be split into two things, right? Basically your workspace, and second thing is your external environment. External environment could be things like you cannot control. Like right now, if you're sitting over here, and then there's a window right there, or rather you are sitting in front of the window working, right? And you start seeing a bird flying past, and then kind of get distracted by the bird. And then you start seeing your colleague knocking on your door, wanting to enter into the office. They'll get distracted by office. In that case, that is interrupted work already. It's not deep work. Now, that is something that you cannot control. I mean, you can do things like, maybe not look at the window, like have some curtains on it, and then put like a do not disturb sign on your door or whatnot. These are things you can do to actually control your external environment. Now, your internal environment, or rather your workspace, is basically things that you can definitely control. Let me tell you something. You cannot work if you have a messy desk. Right now, the desk that I have right now is just my laptop and my phone, or rather my camera, and that's it. I have nothing else. I have no bullshit like fucking snacks wrappers or sweets or snacks on my table, potato chips, none of that shit. All these are distractions, right? So remove anything that does not help with your focus. So clear up your workspace, make sure that it is neat and tidy so that you're able to work better and you actually enjoy working more, right? Nobody enjoys working on a desk which is extremely messy. We are humans, right? Now that is for your physical one. Physical one, very simple. Another thing that I'll do is actually my phone, right? I would not want to have my phone on the table at all. On the table is just my laptop and that's it. Right now, the reason why my phone is there is because I'm using my phone as the camera. But once I'm done with this video, I'm going to lock my phone up in a cupboard because I don't want anybody to reach me when I am working. I want to be extremely focused when I am working. Because the last thing I want to do is to be working and I have like 10,000 different notifications on my phone ringing every single minute. Bing, 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 bing. Shut the fuck up. So that is for your physical environment. For electronic environment is basically what you do to prevent yourself from all the distractions. For me, this is something that's very extreme. I delete all my social media. If you look at my phone, right, even though I'm very popular on all the social media, be it TikTok, YouTube Shorts, Instagram Reels, or whatnot, I'm very popular on all these platforms. You see my videos everywhere. But my team handle all of that. I don't manually post a single video because my phone does not have any sort of social media. Not a single social media. And when I do that, guess what? I'm extremely bored. I don't even feel the need to use my phone anymore. I only use my phone if I need to message my team members or I need to check my email when I'm outside or whatnot. That's the only way that I use my phone, or even take some photos here and there. Because I don't have social media on my phone, and if I don't have social media on my phone, I'm not going to be impulsively like checking my phone every single minute. And that also means that I won't have notification pinging into my phone every single minute. Yeah, another thing is that I have all my notifications on my phone turned off. So the only way to reach me is if I actually manually go into the WhatsApp group and actually look through the messages. I didn't have notification on. That is how extreme I am. But you don't have to go so extreme. What you can do is to install like some sort of ad blocker. Right? For me, I use Opal, right? I use this app called Opal and it's available on the App Store, by the way. You can just download it and then it just allow you to set a time limit to the app. It could be you're only restricted to use Instagram for 5 minutes. And then after these 5 minutes, Instagram is locked for the day. So you won't really be able to access Instagram anymore. Right? Same thing, this is what I use for the phone, and then for your MacBook or your computer, whatnot, I believe there's other apps like app blockers as well that is able to help you focus better. For me, I use things like Focus or Freedom. Right? So these app blockers or rather these website blockers will prevent me from visiting websites or apps that I don't really want to visit when I am working. Because when I'm working, I only want to be focused on doing work. And also, what I have on my electronic is also things like Unhook or some shit. I don't know what's the name. I think it's Unhook. It's basically, it hides all the thumbnails on my YouTube recommendation homepage. You know, when you open up YouTube and you see your homepage, it's filled with like 10,000 different thumbnails with like different colors, and it's super like stimulating, and you start getting curious. You start watching one video on the homepage, and then YouTube start recommending you more videos and just continue binge watching your videos and just end up wasting a lot of time. So what Unhook does is that it removes the homepage, right? It doesn't really remove the homepage, but what it does is that if you go to your homepage with Unhook turned on, you realize that there is no videos on your homepage, right? So they can only use YouTube for business or whatnot, right? So that is basically your electronic environment, right? One thing I forgot to mention is that I like to put my phone on airplane mode so that nobody can reach me when I'm working, and yeah, if I'm available, then that is when I can turn off airplane mode. So electronic, you got ad blockers like Focus and Freedom and Unhook, and I'll actually recommend you to have some sort of focus music, right? Some sort of focus music, right? If you're like me, right, I don't really like to work with like very quiet. I mean, I can work when it's very quiet, but I work better if there's some sort of focus music, right? Some sort of binaural beats or some sort of brain.fm music, which allows you to be able to be focused much more better, right? It is probably better if to use this thing if you have like ADHD or some shit, because I think I have ADHD because I can't really focus very, very well. In that case, I need focus music to ensure that I actually drown out the noise in my external environment and actually focus on the work that's in front of me right now, on my computer right now, and just focus on getting shit done. So, yep, those are the 5 ways that you can do to actually improve your focus as a millionaire. These things are what I do on a daily basis, and they allow me to work for hours upon hours on end. Like I can literally work for 16 hours without fail, right? That is how productive I am. And it's all because of these 5 factors right here. So yeah, I hope you enjoyed this lesson, and just bear in mind that focus is extremely important. You need the ability to focus, and most people don't even have the ability to watch through a long video like this anymore because they are just constantly on TikTok and it's shortening their attention span, and all these dopamine ads is just going around and just ruining your fucking life. So yeah, I wouldn't recommend you to, or rather I would recommend you to actually go ahead and delete your social media. Once you delete social media, your life is going to be 10 times better. Trust me on this. The mindset and the habits of the top 1% trader. 1% trader. Okay, thing about this is that this is a very somewhat of like a boring topic to teach, but it's the most important thing that you can learn as a trader. Trust me, this is what's actually made me profitable. It's not the fucking trading strategy that actually made me profitable. This was the eureka moment when I was able to develop the mindset of a top 1% trader. And as boring as this is, right, I want you guys to focus. I genuinely want you guys to focus because I believe that this will have the ability to change your life and change your trading. I've already pretty much taught you guys everything I know about technical analysis through my Trading Blueprint 2.0 course and also through the past 2 master classes. This lesson will be fully focused on the mental part of it, right? To really sum up these 3 master classes. Talk about risk management, talk about trading strategy, talk about fundamental analysis also. The last thing I want to cover is the mindset, the trading psychology start. So let me just briefly share with you guys my mindset and the habits of top one traders. First things first is to lose money. Lose money. Yes, that's the mindset of a top 1% trader. Is to focus on losing money and not making money. Right now, you might be wondering why. Why would you focus on losing money? First things first, before you enter any single trade, you need to think about. Okay, this is too big. Let me just say it to you. Before you enter any single trade, you need to think about how much money you can potentially lose on this trade instead of how much money you can make in this trade. Most of you guys, before you enter for the trade, you look at the risk to reward ratio, you see, oh my god, 1:5. Wow, sounds good. And then we put, okay, if I win this trade, I will make $500. But you never ever think about, oh, if I lose this trade, I might lose $500. That is why your job as a trader is to minimize your loss. And you can only do that when you think about how much money you could potentially lose before you enter for the trade. And also to make every trade in terms of R multiple. Now, what does it mean to make every single trade a R multiple? Like I said just now, do you notice how I talk about my trades? I talk about how, okay, you are risking this percent to make this percent, you're risking 10% to make 30%, you are risking 1R to make 3R. I don't talk in terms of capital. Let's say you have two guys right here, two traders. Trader A make $20,000, while trader B only makes about $1,000. Okay, trader B risks $50 to make $1,000. Right, this was a super long swing trade, a super high risk to reward ratio trade. While trader A risks about $20,000 to make $20,000. Which one do you think is more impressive? Trader A or trader B? The guy who risks 20K to make 20K or the guy who risks $50 to make $1,000? Obviously, this trader right here. This trader was able to risk like a small capital to make a large amount of capital, to risk a small percentage of their total capital to make a large return. That is why when I say that you should focus on the R multiple and actually look at it in terms of R multiple, what I mean by that is that before you enter the trade, always think about how much R are you risking. So the rule just now I set for you guys is to risk 1% to 2% on each trade. So if you're risking 1R, your goal is to make 2R or more. Your goal is to at least double the amount of money that you're risking, at least. And that is why the concept of risk to reward ratio, you should aim for at least 1:3. Or at least 1:2, right? 1:2 is the minimum. For me, it's the minimum. If the trade is less than 1:2 risk to reward ratio, I would not take the trade. Just stay out of the market at all. Like I said, yes, you can have the best property setup, the best setup, you can have all the confluences in the world. But if the trade is a 1:1 risk to reward ratio, I will not take that trade. As simple as that. I don't care how confident I am in that trade. I will just not take that trade. I stay true to my risk management plan. So think in terms of R right now. Don't just think in terms of, oh, I'm trying to grow this $100 account. How can I take this $100 to turn it into $200? Oh, you know what? Maybe I should risk $50 to make an additional $100. No, think in terms of R. If you risk $50, how much R is that? That's 50R, bro. You're risking 50R to make 100R. You're risking 50% of your account. That means what happens if you lose this 50R? Then you left 50R in your account. You left 50% of your capital in your account. And if you lose this again, guess what? You're just wiped out. You're clean. You have no money inside your account anymore. You just blown your account. Congratulations. So genuinely go think about this for a minute. Think about the R multiple and make every single trade an intelligent risk to reward decision. So right now I'm still talking about the mindset part. Later I'll talk about habits. This is still more on mindset, right? Firstly, think about how much money you can lose instead of how much money you can make. And also make every trade an intelligent risk to reward decision. Is to look at the R multiple. what else should I say? Lose money and protect the downside is the same as this. Um, okay. Another thing I want to talk about losses. Losses. I'm very, very fascinated with this because this is where you find true growth. You don't find profitability from analyzing your wins. You find profitability from analyzing your losses and figuring out what went wrong and figuring out how you can improve as a trader. Losses, you need to change the way you think about losses. At the start of trading, I always think that losses are bad. There's literally nothing good about losses. Oh, if I lose this money, guess what? I just lose my hard money, which I could have bought McDonald's or these Nike sneakers with it. There's nothing good about losses. But as time passes, I've been trading for what, 3, 4 years now? I learned that losses are actually good. Losses are the ones that are actually helping me to improve as a trader. It's not the wins. So generally look at your losses. Whenever you lose a trade, look at it and think about how you can not commit that same mistake again. So I want you guys to understand this. Okay, think about this. When you look at loss, ask yourself this: why did I lose this trade? Not just this, why did I lose this trade? And then what can I learn from this loss? And how can I prevent myself from committing this mistake again? Whenever you encounter any sort of loss, look and ask yourself this question here. Ask yourself these questions. Because if you can ask yourself these questions and you can actually answer these questions, right? Guess what you unlock? You unlock a hidden gem. You unlock a hidden gem. And as time passes, you make more and more mistakes. You lose more and more money and you just unlock more hidden gems. And eventually, you'll be so wise and so good at trading. And it's all because you lost money. And also, trading will be extremely boring if you don't have losses. If you win every single trade, what the fuck is the point of trading? Anyways, losses is what makes trading somewhat rewarding. It's because you know that trading is extremely difficult and you've lost a bunch of money. That's what makes the end goal worth it. That's what makes the profits feel good because you have experienced the opposite part or opposite side of the spectrum. So change the way you think about losses. Okay, that's the third lesson. Maybe let me just give you guys one more lesson in terms of mindset. Emotions. When you're trading your hard-earned money, you will experience a ton of emotions like fear, greed, FOMO, even doubt. All these emotions will arise when you are trading with hard-earned money. The question becomes, how do you control your emotions? There's 2 modules that I created inside the trading blueprint that will help you learn about that. Peak performance trading, peak performance mindset, peak performance mindset, and also my trading psychology module. Those 2 modules, if you want an in-depth guide on this, go study those 2 modules. But let me just give you one important point. When you get emotional, this is the brain, by the way. This is the brain. When you get emotional, right? There's 2 parts of the brain. I don't know the exact science of this, all right? The prefrontal cortex or whatnot. I don't know the exact science. But I know this. When you get emotional, the emotional part of the brain, the part of the brain that actually give you that emotion, actually overtake the logical part of your brain. Isn't this quite fascinating? This is why when you argue with your partner, or okay, let's say your man, all right, you argue with your girlfriend, and you keep on explaining to her, okay, this is the rational way, this is the logical way, but she still continue arguing with you and telling you that she's right, and then she keep on arguing with you until eventually you give in and tell her, okay, you know what, you're right. Why? What does this happen? Because the emotional part of the brain take over the logical part of the brain. right? She is not thinking logically anymore. She is thinking emotionally. And why I find this so fascinating is because in trading, we learn about trading psychology and we learn about how we need to control our emotions when we are trading. But when these emotions arise, we cannot control them because the emotional part of the brain takes over the logical part of the brain. Now, in this case, what you need to do? What you need to do is first step is to be aware, is to take a step back and be aware of your emotions when they arise. Oh, I'm feeling greed. Oh, I'm feeling FOMO. Oh, I'm feeling doubt. And then when that happens, take a step back and reevaluate the whole situation and think whether you should actually enter for the trade or not. If you shouldn't enter for the trade, then don't enter for the trade. All right. So be aware of when the emotion arises and actually reevaluate the situation. And I think you should introduce some sort of pattern interrupt. That means once you're aware that, okay, you are experiencing fear, right? Stop trading, right? Stop trading and actually go for a walk or take a deep breath. Or just do something else other than look at the charts and then reevaluate the situation with a clear mind. That is when you can really learn how to control your emotions, somewhat control your emotions. I never really like this word control your emotions. I always think that it's not about controlling your emotions, it's about mastering your emotions. And this is how you can generally master your emotions by being aware and reevaluating the whole situation as a whole. Now, all these lessons right here, right, these mindset lessons are lessons that I've learned for the past 4 years. And I think they are the most important thing that you can genuinely know as a trader. Because if you can implement this, these are the things that will help you sustain in the game for the long term. If you're planning to trade for the long term, this is it. These are the keys. And another thing about trading psychology mindset is okay, one last point. I promise you, one last point is plan. And actually, talking about plan, let's just move on to the habits of the top 1% trader. We have talked about the mindset. Now let's talk about the habits of top 1% trader. First habit, like I said, is plan. What does it mean to have a plan? Most importantly, follow a trading plan. I talk about this like 1,000 times on my YouTube, on the course 1,000 times. And yet, a lot of you guys still will not follow this. To follow a trading plan is to develop a playbook. That means you must know exactly what will cause me to enter for the trade. Okay, what's my entry triggers? What setups should I enter for? Should I look out for so that I can enter for the trade? And then even when I do enter for the trade, where should I get out? And the thing about where you should get out, there's 2 points, right? Either your take profit or your stop loss. You need to plan both. Before you enter the trade, remember what I talked about. You should always start going in it with the mindset of thinking about how much money you can potentially lose. That's why you focus on choosing your stop loss first, right? Place your stop loss. Let's say this is a trade, right? Let's say you're trading at like a demand zone right here. Demand zone right here. And you enter for a buy right here. And you place your stop loss below this demand zone right here. This is your stop loss. Next, you'll place your take profit maybe at the next zone, which will be somewhere right around here. So you enter for this trade because you have your 4 confluences, because this was the high probability setups, right? And then place your stop loss below, place your take profit above. Now, in this case, inside your trading plan, you must also contain what is the minimum risk to reward ratio that will cause you to enter for the trade. And if it's less than this minimum risk to reward ratio, you will not enter for the trade. For me, it's 1:2. For you, can be 1:3 or 1:4. In this case right here, if my risk to reward ratio is 1:1, it means I'm risking this much to make this much the same amount. I will not take the trade. But in this case, it seems to be I'm risking 1% to make about, let's say, 4%. So this was a worth it trade and I will take that trade. Okay, so these are the things that should be inside your trading plan. There's obviously other things like which currency to focus on, which trading session to trade, And I actually have like a full trading plan for you guys. And if you go to the vault, you will know that I have this plan called the winning trading plan. It's like a full trading plan. This is just like a summary out of it. So go to the full trading plan and actually download it, create your own trading plan, and actually tweak it if you need to, because what works for me might not work for you. You might have a different trading style, scalping, swing trading, or whatnot. So tweak the trading plan and then follow it. Just follow it every single day and execute consistently. That's the first habit of a top 1% trader. Second habit would be to journal your trades. It's to journal your trades, right? I said this is very important because, like I said just now, losses are extremely important and extremely valuable. So you need to make sure every single loss count, and you do that by actually journaling down your trades. So what I do is that after the end of each trading day, after I'm done trading for the day, I will open the trading journal that I have and then just track down my trades. And what do I journal? Whatever I mentioned to you guys over here. Why did I lose this trade? What can I learn from this loss? How can I prevent myself from committing this mistake again? So this is for a loss. If I lose a trade today and I'm journaling, I will reflect about these few questions. Now, if I win and I actually win a few trades in a row, I will think about just one question. How do I replicate this win? How can I ensure that I, replicate this win? Okay, very simple. It's to look for the same setup again, right? Look for the same setup. So loss and win, and that is what you need to put inside your trading journal. Next habit would be to track every single data. You need to have some form of like data tracker. You need to be able to track like, okay, on this date, I entered for this trade with risking about this percentage, and also with a 1:3 risk to reward ratio, and then this trade was a profit. So basically, you need to be able to track your data and have like this information inside your tracker. I would recommend you to actually do our Excel sheet and actually, yeah, just make sure that you track all this data. And I'm actually working on the data tracker right now. And once done, I'm gonna upload it inside the Vault so that you guys can use my own data tracker, the basically the spreadsheet that I use to track my data and stuff. So we talk about following a trading plan, we talk about journaling your trades, we talk about tracking your every single data. Third thing is to back test consistently. Now, why this is so important is because the markets are changing. The environment is always changing, and what works for you now might not work for you later. There's a few phases of the market. There's the volatility part of the market. There's a okay, so let's say there's a bull market and a bear market, right? So bear market could be like a huge downtrend, long-term downtrend, and then bull market could be a long-term uptrend. Within this bull or bear market, there is two phases. You're volatile and also you're quiet. So a bull volatile market it could be like this. A bull quiet market could be like this. A bear volatile market could be like this. Bear quiet market could be like this. Right? Basically, there's different phases of the market, and that is why one trading strategy might not work for all of these phases. Right? Maybe your price action trading strategy could work for this bull volatile market. This setup could work for this bull volatile market. Then you might look for pullbacks during this bull volatile. But then what happens during the bear volatile? How are you gonna trade during bear volatile? I mean, like bull quiet. How are you gonna trade during the bull quiet environment? Okay, in this case, you need to switch up your trading strategy. This is when maybe you can use your supply and demand zones, right? Take advantage of all these supply and demand zones. So you can see, right? Depending on the market environment that you are in, you need to use a different trading strategy. That is why I preach backtest consistently, because the market's environments are changing. They're always changing, and you cannot control that. Only thing you can control is your own trading strategy and how you trade. That is why you should adjust your trading towards the ever-changing market environment. So do just that and make sure that you always backtest. You can backtest on TradingView, or you can even backtest on the Forex Tester 5. There's a lot of software out there that you can use to backtest, right? So backtest consistently, follow your trading plan, journal your trades, track every single data.